able to attend this session today. Despite your busy schedule, you are willing to accept our invitation. And I think we really would like to apologize for giving short notice. We just got the request to invite you last week. So Alhamdulillah, I can see that we have numbers of participants are able also to attend this session today. Okay, so thank you very much for coming to this session. And I would like to thank Yofi for allowing International Islamic University Malaysia, in particular Department of Accounting, to host this event. All right. So thank you so much to Yofi for giving us the chance to be part of this public hearing. Let me brief about this event, in particular about Yofi. So Yofi established in 1991 and based in Bahrain, in the leading international not-for-profit organization primarily responsible for development and issuance of standards for the global Islamic finance industry. It has a total of 111 standards and technical pronouncements it issues in the areas of Shari'ah, accounting, auditing, ethics, and governance for international Islamic finance. It is supported by over 200 institutional members, including central banks and regulatory authorities, financial institutions, accounting and auditing firms, and legal firms from over 45 countries. Its standard and technical pronouncements are currently followed by all the leading Islamic financial institutions across the world and have introduced a progressive degree of harmonization of international Islamic finance practices. So this public hearing is one of the mandatory steps in standard development at IOFI, an opportunity for us to interact with and benefit from the knowledge, experience and wisdom of professional individuals like yourself on the proposed new standards. So today we will be discussing two exposure drafts that's going to be issued soon by IOFI. We understand that the above proposed standard may have far-reaching effects, and as such your input is even more critical to ensure that the final standard do live up to market expectations. To that effect, we have already publicly released a draft on our website for the above standards and are now organizing this public platform to gather industry viewpoints, comments, suggestions, and feedback, which will be presented to the respective boards. So today we'll be having two exposure drafts. The first one actually Shari'ah compliant and fiduciary ratings for Islamic financial institutions. Mainly this draft or this standard set out principles for the rating agencies to be applied for Shari'ah compliant and fiduciary rating of Islamic financial institutions. It provides principal guidance on the responsibility, acceptance, process, reporting, and quality assurance for such services. Rating agencies are free to develop their own detailed methodologies for such ratings, including the rating scales. Okay, so that's the first exposure draft. The second exposure draft is actually on internal Shari'ah audit. The purpose of this standard is to build upon the earlier standard and provide improved guidance on internal Shari'ah audit in IFI that conduct business in conformity with Shari'ah, principle and rules. The standard prescribes the compliance, quality control and ethical requirements, objectives and organizational structure along with the professional requirements with regard to the principle, procedures, documentation and reporting for internal Shari'ah audit. So I hope that this particular public hearing will be able to improve these two exposure draft, and hopefully IOFI will be able to issue these two standards soon. Okay. So with that, I would like to pass the floor to Mr. Omar Mustafa Ansari, Acting Secretary General IOFI, who is responsible for leading the process of development of accounting, auditing, governance and ethics standards for the global Islamic finance industry, besides managing the overall affairs of the institution as the acting head. Okay, so Brother Omar, now the floor is yours. We can start the discussion now.
Thank you very much, sister. Assalamu alaikum wa rahmatullahi wa barakatuhu. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. Thank you everybody for being here in this important session, and thank you very much to the management of IAUM we fully we are very much thankful to the management of AAOIFI and our colleagues and friends there who coordinated for this event. We are thankful to all of you for being here, for this support to the cause of AAOIFI, support to the cause of improvement in the global Islamic finance infrastructure through our standards development process. I'm also thankful to our brother Fahim, who is sitting with me here. Brother Fahim is president of International Islamic Rating Agency, which is IIRA, which is the only body in the world which is presently issuing these sort of ratings. They call it fiduciary rating, and they have been very kind since the beginning of the process of this standard related to ratings. They helped us in developing the preliminary study and the consultation notes and the first draft of the standard. So I'm very much thankful to him that he is taking time to be available here. At last, before going to that topic, at last I would like to mention my apologies for not being able to reach there physically. We would have loved to do that, but because of some pressures related to our upcoming conference and certain other events, and because we have to finalize these standards in our upcoming governance board meeting, so we couldn't actually plan a physical visit. Inshallah, next time we'll be visiting you guys there and having better opportunity of interaction. But the world has changed, and alhamdulillah, these sort of facilities, these technological advancements have provided us better opportunities of holding these sort of sessions. So thank you very much for the introduction part for AAOIFI. If those of you who are not very much familiar with AAOIFI, I would just like to add a few things about the standard setting process at AAOIFI. Normally, is there an echo sound? Your system is attached? Okay. I think there's a slight echo that I'm listening. I hope that is not disturbing you guys. Are you feeling an echo there? It's okay then. If you are not feeling the sound is distorted, then it's not a big disturbance for us. Let's move forward. So I was just talking about AAOIFI's standard development process. The process starts with the selection of the 3 technical boards. We have 3 technical boards. Shari'ah board develops the Shari'ah standards and also has a responsibility to keep an eye on our other standards with regard to their Shari'ah compliance. We have the accounting board, which develops the accounting standards, and we have the governance and ethics board, which develops the governance and ethics standards and is also responsible for the auditing standards. These 3 technical boards, the selection of the members of these boards is based on merit. We receive numerous nominations from our members, regulators around the globe. And based on that, our nomination committee of the Board of Trustees and then the Board of Trustees, with the help of Secretariat, select some most suitable candidates. Governance and Ethics Board and Accounting Board have 15 members, while Shari'ah Board has 20 members. These boards are independent, completely independent. Once they are selected, they select their own, they elect their own chairman and deputy chairman. And after the selection process, the Secretariat or the Board of Trustees has no say in the functioning of these boards. Obviously, Secretariat is there to support their functioning, but their decisions and their whole process is completely independent, and there is no interference of Board of Trustees into that as well. So effectively, these technical boards, in line with good practices, are completely independent. According to our strategy, we are shortly going to add a public interest monitoring consultative committee as well, which is going to keep an eye on the standard setting process with regard to the public interest and the overall benefit of Islamic finance industry. The accounting, these boards, today's both standards we are going to discuss related to governance. So let's discuss more or less the process is the same for all the technical boards. These boards develop their own long-term strategy and plan, and we normally discuss those strategies in our conferences as well. When there are major changes in the strategy, we bring them and we have them for the public discussion in our conferences as well. In line with the strategy, we develop our long-term plan and identify the areas where the new standards are needed or where our existing standard needs revision. And based on each of the project that is identified, we develop a working group. On the Sharia side, we have permanent subcommittees, while on the governance and accounting side, we normally develop a working group, which is normally chaired by one of the board members, and at times a few board members are also part of that working group. But then we select most suitable candidates that we can identify from across the globe on that topic. So normally the working group process is not a nomination-based process that only the members nominate or something. Rather, we select the best possible candidates that we can have for the working group with regard to suitability on the topic and their expertise on the subject, rather than just a nomination or like a simplified fixed committee basis approach. This actually helps us significantly in getting the input. And like, for example, for this one, we invited people from all the big rating agencies, and at least one of them was there. International Islamic Rating Agency actually assisted us in the whole process, and we are so much thankful to them. So after the initial preliminary study and consultation notes, which are discussed at the board, we draft a standard, and going through the whole process of working group, it reaches the board. And once the board approves the exposure draft, then it is made public in form of exposure draft, on which anybody can provide comments. And we circulate it to a pool of experts and our mailing list as well, in addition to issuing general press releases and putting it on the web. And one thing that we would request you all to send your email IDs if you like to receive our exposure drafts in future, so that you can provide your comments. Normally we hold at least 2 public hearings, but at times we hold more public hearings. Considering some sensitivity related to this standard in particular, I think it's 9th or 10th public hearing for this standard in particular, the rating standard, because there are some sensitivity involved to that. Other than that, normally we hold at least 2 to 3 public hearings, and at times more. And we try that at least one of the public hearings is in the format of a webinar, so that anybody across the globe can join in that webinar-based public hearing. And normally when we conduct the public hearing in Bahrain, that is with the webinar option. So all of you can always keep an eye and keep track of our activities, and can join in for the public hearings in future as well. Once the public hearing is conducted, for the public hearing, what we do is we present the standard, we discuss the important parts of the standard, and we take comments on standard in general and on the specific areas, and then we compile them all together for the working group and the board. When you give some comments, some of the points I may clarify to you, but clarification doesn't mean that we don't take a note of your comment and we take it to the board. Some of the points we know that board has taken a clear view on that. So I can explain to you that, okay, for this reason, the board took a clear view on this matter, or maybe the board has considered multiple aspects but identified that one of the aspects was better. So I can explain these things to you, but still, whatever you comment, your voice is not unheard, and it is taken into notes, and then the compiled notes, including the public hearing comments and including the comments received in writing on the exposure drafts, are taken to the board. First the working group, and then to the board. Then after this due process, we finalize our standard. So this is the overall process, and I just wanted to mention that process to understand, to make you understand the importance of this public hearing in this whole process. So, does anybody have a comment on generally our like our standard setting process or anything that I mentioned? Anything about functioning of AOP? Anybody has a comment or a question, please? No comment? I, okay, let's move forward. Let's move forward and then we will see. Sorry. Is there a comment?
No comment so far. I think we can proceed. Please proceed, Brother Omar.
Okay. Thank you. Let's proceed. Thank you very much. Okay, now this standard, let me give you a little bit background about this standard. I'll try to be quick on this one because I just want to identify the significance of this one. We just take this example that there is a person who has moved from one country to another country. Now he is a Sharia conscious investor and a Sharia conscious person. So he has to take care of his financial needs through Islamic finance. Now he reaches a new country, or there is an existing businessman who starts business in the new country. Now, what information today they have available with regard to the suitability of Islamic financial institutions? Normally, most of the countries still don't have a Sharia audit requirement. Normally, only the Sharia board report is the only published material which is available. AOIFI has issued an external Sharia audit standard, and some of the countries, around 4 or 5 countries, have started the process of external Sharia audit we are aware of. Includes Pakistan, Bahrain, Oman, Brunei, and Kuwait in respect of the capital market. I think Malaysia has recommended but not mandatorily required that. So even the external Sharia audit reports are not available. And we need to understand that even if you I'll discuss that aspect later, that in what aspects the rating is different from the audit. Now, the problem is that if you talk about conventional institutions, if I move from one country to another country and I want to make an investment with a conventional institution, normally I have some information available with regard to that. I have the financial reports available, I have the auditor's report available, and I have the credit rating available. Now you can argue that even for Islamic financial institution, you have the audit report available and the credit rating available, because normally the credit rating is requirement of the regulators, so they all have it. But the issue is that when I evaluate the nature of Islamic financial institutions, it's not exactly the same. And when I evaluate the information needs of the Muslim investor or the Sharia conscious investor, they are also not exactly the same. They might have some differences. And one of the differences for sure is faith driven, which means that I want the things to be Sharia compliant. But the second aspect is the fiduciary aspect as well, which I would like to explain. So the first aspect, I will go first for the Sharia compliance aspect, that if I want to invest with Islamic financial institution, or if I want to do business with an Islamic financial institution, considering my needs, it is imperative that I should have some information with regard to the level of Sharia compliance that this institution is having. Sharia board's report is the only information that we have, and we know that Sharia boards are quite busy. They are normally not in a position to verify the things themselves. And if there is internal Sharia audit, which is also a very important function, but that internal Sharia audit reports are not made available to me. So what information do I have? So I need to have the information with regard to Sharia compliance. So that first aspect can be covered partially through the Sharia audit. And that is one area where we have developed a standard, and we believe that should be, and that is an important step for Islamic finance industry to move on. But at the same time, audit provides you opinion in form of yes and no. Audit doesn't provide you information with regard to the comparative or the relative state of compliance. That which one is more compliant and which one is less compliant. And you know that in audit, the materiality is very important. So the material items may not be there, but still there can be a lot of immaterial items. Or still audit doesn't focus primarily on the governance part. So maybe the auditors couldn't find any non-compliance, so they said that the report is okay. But the governance and the Sharia governance part of the institution might not be that good. Because my investment will be, the things are related to future, not only to the past. And audit normally doesn't give an opinion on the governance structure. And at times we joke around that we say that if you don't have a good Sharia governance structure and you are still Sharia compliant, it can happen only by blessing of Allah, that you didn't have an opportunity to have non-compliances. Because you had given the room for non-compliances, but you were lucky enough for not having non-compliances. So even for the Sharia compliance side, the governance structure is important, and because audit will provide me the past information that the past year was good. But if the governance structure is not good, then there are enough risks that in future there can be Sharia non-compliances. And the second part, let's come to the fiduciary part. Okay, let's assume the Islamic financial institution is compliant. But at the same time, the institution does not have very good measures for the asset safeguard. It doesn't have a very good investment management policy. It is not having a very good asset management practices. So it might impact me as well. I normally give an example that what would be the difference between a conventional institution and Islamic institution. Normally, I'm not discussing about right now the Qarz-based accounts or Wadiya-based accounts or the commodity Murabha-based accounts. I'm mainly talking about the investment-based accounts, that is Mudaba-based accounts or Wakala-based accounts, which are in around the globe, which are the majority for sure. So, for example, I just take an example that if I come to you and I say that, okay, please lend me $1,000 and I will give you $1,100, that is with 10% interest after 1 year. So if you are not concerned about permissibility or impermissibility of the interest thing, what you will see in me? Primarily, you will see the credit worthiness of the person or the institution. So for that purpose, you will see that whether this guy, Umar Mustafa Ansari, is able to give me back my money after 1 year with this much return. And you will see that, okay, he's on a good job, he has some assets, he has some security, so I'm okay with it, so you can lend it to me. And just let's take an example that I took the notes of $1,000 from you and I just make cigarettes of that and just smoke them in front of you. I just destroyed the money. Will you be concerned? Yes, maybe, but what will be your primary concern? Your primary concern will not be that I'm wasting money. Your primary concern will be, is Umar Mustafa Ansari still worthy enough to pay me back my money along with interest after 1 year? And that is what we see in the conventional institutions. We are less bothered about what they are doing with our money, but we are bothered about their ability to pay us back along with interest. But when you come to an Islamic financial institution, I give you the same example for AAOIFI. What I do that I come to you and I say, okay, invest $1,000 with me and I have good business opportunities. I'll invest your money in those good business opportunities. And after that, I believe that after 1 year, I'll be able to give you back, according to the profit sharing formula, 1,100. And there is all probability that you will get 1,100, but it is not guaranteed. And then I took the money and I wasted the money in front of you. What you will do? Will you be concerned? Because here the issue is not credit worthiness. Here the issue is whether your money is invested in Sharia compliant avenues and whether the money is invested in proper avenues and the management is proper, the governance is proper. I am fulfilling my fiduciary and trustee responsibilities with regard to that money so that you are able to get your money along with return, expected return after 1 year. These are the aspects of fiduciary responsibility which are different from the conventional institutions in addition to that. So we normally call it additional fiduciary responsibilities. And those additional fiduciary responsibilities impact the risk factors in the Islamic financial institutions and impact the governance requirements for Islamic financial institutions. So let's take an example that I come to Malaysia, I invest on an investment account basis in one of your banks, like Bank Mamla. And what I do that I expect all good returns there. But if there is a genuine loss in the Mudarba pool, is Bank Mamla still bound to pay me back my $1,100 with the return? They are not bound. If there is a genuine loss, for example, there are genuine financing losses, the investment losses, the market value goes down for sukuk, some of the clients go to default situation. They are not guaranteeing my money, neither principal nor return. So if they are not guaranteeing my money, how it would be sufficient to have only credit rating for that institution? That is the main question that we have. And that is the reason for development of this standard. That we at AOIFI, we believe that, our governance board believes that for the Islamic financial institutions, only credit rating is not sufficient. Credit rating might be relevant with regard to some of the transactions, but with regard to the majority transactions, credit rating is not sufficient. And while the credit impact is there, still the Sharia compliance impact applies there. For example, if I put money with you in your account, still I may need to have an assurance that your money is invested in Sharia compliant avenues, even if I don't expect a return on that. So even on the credit worthiness part, the Sharia compliance part is still there when I deal with Islamic financial institution. So this is the whole need for this standard, and this is the reason that our governance board initially approved the project, and now we have come up with the exposure draft with the help of our friends at AAOIFI. And we will be developing, the second part of the project will be that we will be developing a instruments standard after this. Do we have any comments on this background or the overall approach for this standard?
Assalamualaikum, brother. My name is Hamami. I'm from EY. I think I would like to agree with your comment earlier. The objective with regards to the standard, which is to demonstrate the financial compliance on Shari'ah. But I just want to be clear here, this standard will not, in a way, overcome or duplicate the standard for crediting. What I'm trying to say is that as an investor, as a Muslim investor, in terms of performance of the particular financial institution, I can look at the normal applicable crediting. But in terms of the level of Sharia compliance, this is where this standard will fill in the gap. Is that clear? That means in terms of the financial strength and stability, that will leave it to the crediting. But for the Sharia compliant level, that is where the objective of this rating on Sharia compliant. Is that clear?
Okay. Thank you.
So
thank you for your comment.
What I'm trying to say is that this rating will not look at the performance or the strength or the stability of the Islamic financial institutions, because that itself is already covered by the applicable rating agencies. This is more towards to cover the gaps which are on the Sharia compliant.
Just to clarify, sir, right now we are expecting that the credit rating will continue and this will be additional rating. So if it is done by the same institution, then the same institution will have look at both. But if it is the two different institutions, two different rating agencies doing both the ratings, then in that situation, maybe there will be some overlap, because this one also needs to look into the governance part and the fiduciary responsibility and the asset quality part. This is also important, sir, because we have talked to rating agencies as well. And when we discuss to them, they say that they consider governance, they consider some of the fiduciary aspects, but they don't go for it. Like, for example, you know that a lot of rating agencies, or rather all the major rating agencies, don't perform mutual fund ratings. And this was one of the discussion points, that mutual funds, because they are not primarily credit instruments, the mutual fund units are not credit instruments. So normally these entities don't rate them. Now, this was one of the aspects, that only Sharia compliance is not the issue. Rather, additionally, this is also an issue whether the governance and the asset management quality, these are good enough so that you can have a good view about that. Because, like, for example, the Islamic financial institution, when it has an investment pool, it is more similar to a mutual fund rather than from the internal mechanism of profit sharing. It's more similar to mutual fund rather than a conventional bank. You want to add, Brother Fahim wants to add something here, sir?
Yeah, thank you very much. I think as a rating agency, we have noted that if you look at Dubai Islamic Bank at the turn of the century, there were issues in the governance and the Sharia aspect, and that led to the credit event. So I think with what we are doing at the Islamic International Rating Agency, we look at both the aspects, like the credit aspect and the Sharia aspect, because we believe that if there is a Sharia issue, the deposit holders can have a view, adverse view on the institution, and they can start withdrawing the deposit. That can lead to a credit event. So I think, as Brother Omar is saying, that both the things should go together for the Islamic financial institutions. You cannot segregate the Sharia aspect, the fiduciary aspect with the credit aspect. You can have a very fantastic returns, but then if you are very poor or you are not compliant with Sharia, it can lead to a credit event anytime.
Thank you, sir. Okay, let's move forward. We thank you for your comment. If there is any other comment.
Assalamualaikum warahmatullahi wabarakatuh. Makta Abdullah from Asas, Association of Shari'ah Advisors. If I can get a clarity, the purpose of this rating agency is targeting individual or institutional investors or clients. If that involves the individual, or for that matter, an investors as well, institutional, that would involve some cost. If it is expensive, then individual will not take part on this additional cost. Maybe for institutional, they will take into this consideration because they have other factors for them to comply with. Thank you.
Thank you. Right now we have two projects. First project that is here is the institutional rating, means that a bank will be rated or a takaful company will be rated according to this standard. The second part of the standard is instrument rating, means if I issue a sukuk or if I have a restricted investment account or any other instrument, then there has to be rating of that individual instrument which is available to public. That will be the second part. The third part is the individual rating, which we believe is not the rating service, rather it is the credit bureau service. So we will not be going on the individual rating part, which is the credit bureau function, and we don't believe that we have any specific Islamic finance aspect attached to that. So the third part, that is the individual part, we will not go for it. But the instrument part, we yesterday had our first meeting to start the process, and in our upcoming board meeting, we will be discussing the instrument part. And I'll just add to what Brother Fahim said. Let's take the example of Dana Gas Sukuk. Now, Dana Gas Sukuk had significant governance issues and additionally Sharia compliance issues, and these resulted in a disaster at one given point of time. Now, if there were good systems of sukuk governance applied to that, and there were Sharia compliance and fiduciary rating for the sukuk instrument available to you, maybe you were in a much better position to assess that thing. A loss is a loss. Loss may still come. I'm not saying that a business loss or operational loss may still come, but as a shocking situation or as a disastrous situation, you may avoid those things.
Yeah, because we have also noted, by the way, brother, that in the sukuk issuances, there is no comprehensive way of monitoring the sukuk over the life. The rating agencies look at that. However, so now with the sukuk, this is also a very important aspect where the governance and the rating agencies should be able to look at the monitoring time of the yearly monitoring. They should comment on the aspect, like Dana Gas, like Brother Umar has said. So there should be some kind of a standard for the rating agencies when they are rating sukuk, that there should be a continuous monitoring on the aspect, on the Sharia aspect of the sukuk investment for the investors.
Just for the benefit of the audience, I would like to add that we have recently issued an exposure draft on sukuk governance as well as a part of our comprehensive sukuk project. So it will be very nice if you guys can just have a look at it. It is available on our website, and if you can provide your comments, so that can add value for sure. Any other comment before we move forward, sir?
Yeah, my name Zulkarnain from INSAF. Looking at the standard, I find out that this standard biased to AAOIFI jurisdiction, which is you may apply to your countries that adopt your standards. If you look at paragraph 20 on the parameters, the criteria there A to D, it is AAOIFI centric. And looking at paragraph 22, 23, 24, and 25, it is AAOIFI focus. And it is more interesting looking at paragraph 24 when you look at transparency and disclosure, looking at two different regimes, IFRS regimes and AAOIFI regimes. AAOIFI regime, you have three additional reports where you disclose on received investment, charity fund, and court funds. You have three separate reports, which is IFRS, we are not required to report that, which is if you do the rating, of course, countries or banks that under these regimes will fare better than the other regimes. Thank you. And on the sukuk side, one of the study undertaken in INSAF, which is under my student, we found that sukuk in this side, they are rated not really looking at Shari'ah issues. It is more on credit issues rather than Shari'ah. For example, products that using equity base has no different with that base. We expect a certain direction. But then the details we can discuss later. But I think it is a good work if you can have a product-based rating. Thank you.
Okay, thank you, sir. So let's answer. Thanks for your second comment. I believe it's addressed, so it's okay. I'm not going to make comment on that. The first comment, it was going to be addressed later, but let's discuss this now. When you say that you want to rate, rating doesn't mean yes or no. Rating means comparative state, means relative state. What does it mean that you have to compare one institution with another institution, and you need to mention that this institution has a AA rating, this institution has a AAA rating, and this institution has a B rating? I'm just giving it for example. Rating and Sharia audit are different. Sharia audit can take directly a view that yes, it is compliant, but the relative state of compliance comes into rating part, and which includes the fiduciary part as well. So first thing is that if you want to do rating, you need to identify a set of parameters. It is never possible that you have separate parameters for all the institutions and separate parameters for all the jurisdictions. If you have separate parameters for all jurisdictions and separate parameters for all entities, then there will be no comparable rating around the globe. It can never happen. But so for that purpose, there is no possibility other than driving the things to one of the standard setters from whom you can have the right thing. That is the first part. Second part, I would say that we tried in this standard, wallah, we tried in this standard, not to be biased. You can see IFSB name around everywhere in this standard. While I can just tell you that we are, alhamdulillah, we have signed an agreement with IFSB for working together. Alhamdulillah, we are working together on one project now, and we plan to work on more projects. And we are very much thankful to the IFSB's new management that we are working together. But even before that, we put it, like we were not under that agreement, and we put it there that, and in one of the areas you will find IFSB above AAOIFI. Now you will, now some of the people had objection it on the other way around. They said you are the standard setter and you are putting IFSB above you. We said yes, this area, the corporate governance area, is primarily IFSB area.
The 23.
Yeah. So in that area, paragraph 23, IFSB is above us. Now coming to the reason for selecting standards. The reason is that unless you set the parameters on a uniform basis, you cannot have a comparable rating. Everybody will be rated according to their own standards. So for example, one institution doesn't follow neither AAOIFI nor Bank Nagara, Shari'ah Advisory Council views or any other similar views. They don't follow it. They say, okay, we have our own parameters, we have our own Sharia board, we decide only according to our Sharia board. How I can compare it with another institution which follows international standards? And the issue is that we want this information to be available to neutral investors and customers. So a neutral investor and customer, how he can have it a uniform basis. So what we did, we put the main parameters which you have mentioned, and for sure those main parameters are there. They are tilted towards AAOIFI because AAOIFI is the global standard setter in these areas. It's not only about that we did it. No, we evaluated other available standards and we mentioned them with us. Now coming to the accounting part. Honestly, we believe that Islamic finance accounting cannot be addressed directly by IFRS. You need to have additional treatments and additional disclosures. And even if you follow IFRS, you still need to have those additional treatments and additional requirements. And some of those, and if you see, we mentioned about in the criteria for Sharia compliance, we said that the financial accounting requirements insofar as they entail Sharia requirements. This is the wording, which means that we are not talking about all AAOIFI accounting standards, but we are talking about the crucial Sharia accounting requirements. For example, timing of recognition of revenue. In a Murabaha transaction, you cannot recognize a profit and you cannot distribute that profit to your investment account holders and shareholders according to Sharia, unless you have legitimately earned that profit. It means that you have completed the transaction consummation part, that the goods are purchased and sold to the customer. Now assume that there was an advanced stage for 1 month or 2 months or 3 months. Can you recognize that revenue? According to Sharia, you can't. According to AAOIFI accounting standard, you can't. But according to IFRS, if you consider it as a financial instrument, you can. But according to IFRS, if you don't consider a financial instrument and you consider it a sale converting into a financial instrument, then you again will not be doing it. So even following IFRS, you can still maintain some of the minimum Sharia compliance requirements. So when we talk about those minimum Sharia compliance requirements, even if you are following IFRS, the requirements are contained in AAOIFI accounting standards, but those can be tested against IFRS as well. Because even under following IFRS, you can have it. On the transparency part, you yourself mentioned that there are some transparency areas which are missing under IFRS noble treatments, which are relevant for the Islamic finance information needs. So an institution which is providing that information and an institution that is not providing that information cannot be comparable. The one which is providing that information should be given a level above the other one. And IFRS doesn't bound you to give additional information. You can still provide additional information under IFRS because they allow you additional disclosures. So putting it all together, we try to be very neutral in setting the standards, but for sure, AAOIFI standards are there because they are the global standard. Coming to the last point of this discussion, because this discussion was going to take place at later stage, but we are taking it now, still there can be countries where the Sharia Advisory Council of the Central Bank or the Central Sharia Board, as we call it, may have a view above AAOIFI Sharia standards. Like AAOIFI Sharia standards are not adopted at all, or if they are adopted, they are given a status below the status of the Central Sharia Board or the Central Bank regulations. In that situation, we have allowed, if you see, we have allowed a jurisdiction-specific rating, which means that if in Malaysia AAOIFI Sharia standards are not adopted and AAOIFI accounting standards are not adopted, then the criteria will be changed accordingly and parameters will be based on that changed criteria. But then it will be called a Malaysia-specific rating, which might not be equivalent to a Jordan rating, because Jordan may be following those standards. So some of the requirements which are already there. We believe, and we have talked to our brother Akram Laldeen and other friends from ISRA and from the Central Sharia Board in Bank Negara. They believe that they try to keep uniformity with AAOIFI Sharia standards. So this is the last point I want to present, that even if you don't legally adopt AAOIFI Sharia standards, but you still might be compliant with AAOIFI Sharia standards because Bank Negara is Central Sharia Advisory Council is also taking care of uniformity with Sharia standards of AAOIFI. So it means that even if you don't go for jurisdiction rating and you go directly for the global rating, you still might be compliant. You might not be saying that I am complying with AAOIFI Sharia standard, but you might not be in any non-compliance with any of the major requirements of that. So it was a discussion that was coming later, but I just presented it now. So if there are any further comments on this.
My last issue on paragraph 30. The weightage high on compliant with Sharia principle and rules, and it go down to fiduciary, the lesser weightage. If you look at centralized governance model like Malaysia, we have Sharia Advisory Council of the Central Bank to look into Sharia principle and rules. It is more standardized, the product more standardized. Therefore, if you put high weightage on that, so you can't find differences between banks to banks, because unless they cannot pay, then they go to the bank, they said it is non-Sharia compliance. There is many of the court case. But in general, from the issuance, from the beginning, I believe it is standardized product, it is Sharia compliant. So my issue is the weightage there. You might consider to maybe change or maybe do some variation on the weightage. Thank you.
Thank you very much. We can understand your point. Some countries have very good mechanism of Sharia compliance, so they will be generally getting more, and there will be no clear difference identifiable from that part. But we were looking from the concern of the investor or the neutral customer. So again, one thing, this is suggested, and we are very clear. Actually, yesterday even we discussed again with ERA that it is suggested. So any rating agency can have anything different from it. It is only the suggested range, but we take your point to the board, and the board will reconsider if they want to give more flexibility in these weightages. But still, these are suggested weightages. So board may still consider giving more flexibility in this one. But again, I can tell you that some of the places we were given a comment which is exactly opposite. Some people were saying that Sharia compliance should be at least 50% of the weightage. I'm just telling you, because this is also one of the comments, because we are compiling all the comments, so we will take them all together to the board. So the board may accept to give more flexibility. This is up to them.
And it could be on the rating agencies perhaps, because the important point is the components. You can have more components, but these are the least components, what I understand, that to be followed. A rating agency can have his own methodology, and a rating agency can add more components and vary these, and the weightages could still, if they are suggested, then it could be realigned, and according to the methodology, it could be disclosed to the public.
If you allow me, I need to clarify 3 parts here. Number one, this standard is not a mandatory standard. It is encouraging rating to be done, but it is not mandatory standard. But it is saying that if the rating agencies are doing rating, then they should be using this standard. Otherwise, it's not saying that every institution must get a rating done. It is encouraging the institutions to get the rating done. That is the first part. Second part is the methodology part. We wanted any rating agency who comes into this area to follow a minimum principle-based approach with regard to the methodology, but we have given them enough flexibility to develop their own parameters. We have just given the criteria. Based on the criteria, they have to develop detailed parameters themselves. That is one. Secondly, the suggested weightages, components, and the suggested weightage components, and the suggested scoring and the rating schedule, rating scale. They are all suggested. The wording in our standard is very clear that these are all suggested, because we want the industry to develop, we want this market to develop, so we had to provide some principal guidance. If you just write a standard for 2 pages and say there should be Sharia compliance and fiduciary rating, and you don't provide this principal guidance, maybe the rating agencies would not be able to come into it, or if they start coming into it, they might have a problem in actually understanding the needs and understanding the issues. So what we did, that we came up with complete principle-based guidance, providing enough flexibility for the rating agencies to develop their own methodology, their own rating scale, their own parameters, and this is only based on the principal guidance for all these areas. So it is an important clarification that this is a principle-based guidance standard. It is not providing any strict rules. So any flexibility is allowable in this area, and particularly it also allows the jurisdiction specific rating. If you want to say that you have a AAOIFI compliant rating, then you have to follow most of the requirements of this standard in the sequence provided by this standard. But if you want to have a jurisdiction specific rating, then in that situation you have to take only the principles. You even don't need to follow the criteria as given in this standard. Shall we move forward?
I have a question. Assalamualaikum.
Yeah, please.
My name is Muniza. I'm from INSAF as well. My question is regarding the naming of the exposure draft. Why is it called Sharia compliance and fiduciary rating for AAOIFI? And why not Sharia governance? Because in my opinion, when you say Sharia compliance, it becomes too basic for the AAOIFIs to follow. Because the lex loci applicable to Islamic finance is Sharia, so Sharia compliance is two fundamental things that must be observed by all the AAOIFIs irrespective of the jurisdictions in which it's operated. So I just want to know the rationale for that.
Okay. The reason is that we discussed that shall we take it for granted that they are compliant if the Sharia audit report is okay. For example, this was one of the discussion points at the working group level and at the board level, because there was one possibility that we go only for Sharia governance or only for fiduciary rating without going into details of Sharia compliance. So in that situation, we will assume that the Sharia audit is sufficient measure for Sharia compliance. But then we discussed some of the aspects, and those aspects were important. Let me give my personal example to you. I belong to Pakistan. I moved to AAOIFI in Bahrain. When I moved to AAOIFI in Bahrain, I had to find a bank of my choice. And for sure, I wanted an Islamic bank. Now, there are different Islamic banks, and you might know that in Pakistan, we are a bit conservative in a number of transactions. You might have an idea about that we Pakistanis are a bit conservative. So, for example, personally, I don't like tawarruk. I say that tawarruk is permissible, but not a very good transaction as per normal thing. So, I wanted to know which banks don't follow tawarruk. And if I didn't have enough information about it, then I selected an Islamic bank, but I kept a current account rather than saving account. So I didn't have investment account. I'm talking about myself, and there might be some people like myself around the globe who still have this problem. But the issue is not that sufficient, that only. It's not about that I want to have all the information about. I want to know about the comparable level of Sharia compliance. There are two institutions in Bahrain. One I know doesn't do tawarruk, and very rarely they do tawarruk only in the interbank market, and that is still they don't do with the conventional institution. AAOIFI Sharia standard allows tawarruk. Now you know OIC Islamic Fiqh Academy doesn't allow tawarruk. Organized tawarruk they don't allow. Lot of other scholars you will find around the globe who don't allow organized tawarruk at all. OIC Islamic Fiqh Academy is a big institution, very important institution, and that doesn't allow organized tawarruk at all. AAOIFI allows tawarruk, but it has multiple conditions. Number one, it must be 4-party tawarruk. It cannot be 3-party. That means that A sells to B and B sells to C and C sells back to A. It doesn't allow that. And it should not be organized in a manner that it goes back to A even from D. Secondly, it says that tawarruk should not be used for taking deposits. It should not be used normally for retail transactions. It shall be used for need basis only, and it should not be used to place money with conventional banks. These are all requirements of this standard, that although it is permissible, not haram, but you have to take care of all these things. So now there is an institution who takes care of all these requirements and either doesn't do tawarruk or does tawarruk only for need basis. While there is another institution which follows tawarruk, 80% of its balance sheet is tawarruk. 80% of the asset side and 60% of the liability side is all tawarruk based. Do you think in terms of Sharia compliance, both of these are the same and comparable, even if both of them will have a Sharia audit report which says that they are compliant? So my point is that they might be compliant, but the comparable level of compliance for the need of the independent user might not be available there. So this is one aspect, that rating is not only about compliance. Rating is always about the comparable level of compliance, the relative level of compliance. So that is one area. Some people may not be interested in that much depth, but some people for sure would be interested. And actually, we want to use these standards, the Sharia audit standard and this standard, for the long-term growth and improvement in the Islamic banking industry. Because you know, in a number of markets where Islamic banking and finance has been growing fast, is now not growing at that level, that fast pace, reaching the saturation point and all those issues. And some of those issues are caused because still these institutions are unable to convince the general market that they are genuinely compliant. Our governance standards in this 2 years particularly have been focused mainly on these areas where we can improve the level of Sharia compliance and the fiduciary responsibilities. So maybe some people might not be interested in that much depth of information, but we believe that this much is important for the long-term growth. And let me tell you one thing, this is not a mandatory standard, but we want this thing to be incorporated through peer pressure. Like one bank gets rating and it gets a AA rating, and the second bank now, because now first bank is publicizing that it has a AA Sharia compliance and fiduciary rating, so the second bank and all the banks in that jurisdiction will be under a peer pressure. And for that purpose, they will even have to improve their processes, their products, and even their product selection needs to be improved. Because if they want to have the AA or AAA rating equivalent to the first bank, they need to have this thing done in a more holistic way. But again, what we are saying, compliant means compliant. We don't want to say that if somebody is doing tawarruk is non-compliant. No, we are saying that if you are doing the more preferred products and you are the other bank is doing less preferred product, you still have a right to have a better rating.
Isn't the whole purpose of having a Sharia governance framework is to achieve Sharia compliance? In that case, Sharia compliance. Sorry. In that case, isn't Sharia compliance is just part and parcel of the big overall Sharia governance framework? And for example, if you look at paragraph 36 of the draft, you will see controversial products avoided. Now, who determines whether these products are controversial? And in the example you gave just now, you were referring to tawarruk, right? So how do we know whether a company or a IFI offering tawarruk is non-Sharia compliant? Because, for example, if you follow the BNM standards, there are certain yardsticks given, right? So as long as the IFIs follow those yardsticks, we can't say they are less Sharia compliant or, we can't quantify it. And when I read the whole standard, even I couldn't understand what is the yardstick used to measure Sharia compliance, because always there in the draft it is referred to use the benchmarks in the Sharia governance standards issued by different standard setting bodies. So my question is like, in this case, who determines the controversial products? Is it the rating agency or the respective SACs or the regulatory authorities or who? And then wouldn't this pose too much controversy in the industry? Because when you say Sharia compliant, you are like third level Sharia compliant, second level Sharia compliant. I mean, aren't we creating something which would be controversial in the industry to the extent that even the investors would be so confused about the fundamental principles followed by Islamic financial institutions? Because the core of any Islamic financial institutions is that they have to follow Sharia. But the standards followed in Sharia might differ according to the governance standard adopted by the IFIs. So I think quantifying the Sharia governance standards is okay, but when it comes to Sharia compliance, just because somebody is using a controversial product, in my opinion, cannot be like something which is not Sharia compliant. It's too harsh to use non-Sharia compliant or less Sharia compliant or so on and so forth, and I couldn't even find a definition of it in the context of draft exposure. So this is just my opinion. Thank you.
Sister, we take your point. We will take that point forward. That is there. Like all these points we are noting, and we will take them forward to the working group. But let me explain this part. When we say that compliant, the audit is sufficient for that part. When you have audit and audit says that it is compliant, it means that even if it is following the minimum parameters, but it is compliant. But there are issues with regard to the level of compliance. We are looking at the bigger picture. We are looking at the future of Islamic finance. We are not just looking at the present state of Islamic finance. And I can tell you that our governance board and our overall approach, we believe that Islamic finance industry today needs significant improvement to reach the level, a desired level. As I mentioned in the beginning, it is not a mandatory standard. So nobody is binding you to get this rating done. But we want to get the improvement through peer pressure. So if there are products which are controversial, they should not be followed, because we want to have a global set of Islamic finance which is acceptable to everybody, which is of top quality, and which has no controversial and less preferred products. That is something that we are trying to achieve. And we are not putting it as a mandatory standard. So if you don't believe that you want to go for it, nobody is binding you for that. But if there is an institution who wants to who wants to be vanguard of Islamic finance and wants to take it to the next level, and that says that yes, we want to be compliant and we want to be rated top, they can go for this rating. This rating is not a mandatory thing I mentioned initially, because we know that presently all the institutions are not at the same level, all the jurisdictions are not at the same level. But we are thinking of the future, we are planning for the future, and we want future Islamic finance to be better and better. And we know on a number of jurisdictions, there are a lot of improvements. In Malaysia, we can see a lot of controversial products are being avoided, both on takaful and both on takaful and banking side. In Pakistan, we had some controversial products. These are avoided now. So there are a lot of things that you can find. We believe that there are some genuine issues in Islamic finance if you allow individual institutions, Sharia supervisory boards, according to their own fatwa. Then even the issue of fatwa shopping is there. You know, I can find dozens of papers on fatwa shopping and hire a sheikh sort of approaches. Do you want this thing to continue for Islamic finance? I think that we don't want to continue on that, and we want Islamic finance to be more harmonized and more and having a more a stronger level of compliance. Again, controversial products, everybody knows which are the controversial products. Rating agency can clearly identify, because the benchmarks that we have identified are identifying the controversial products themselves. The standard says it should be done this way, but if there is a need, this can be done this way. This means that this is the preferred thing and this is the less preferred thing, and these are very clearly identifiable in all the standards you will find, not only AAOIFI Sharia standard, even the country standards you will find a lot of situations like that. Secondly, if there is a product in one country which is not followed by other countries because they consider it to be non-compliant, then if I move to that country or if I do business in that country, wouldn't it be better for me knowing that this level of compliance is less? These are important things, sister, and I believe that we are not talking about the present state of Islamic finance only. We are talking about where we feel the ideal Islamic finance industry should stand at. So, but for sure, your point is taken, and we will take it to the working group.
Okay, Assalamu alaikum, Brother Omar Ansari. This is Faik Najib from IFSB. I can see you clearly on my screen, but maybe you can't see me. So,
Okay.
I wanted to thank you for bringing up our partnership, and of course, IFSB is with IOP, and that's why we are here today as well. And I mean, we want to thank you. In paragraph 23, you put our standards on corporate governance first, so that's also very appreciated.
We tried, brother. We tried to be honest to us. let's be honest. We tried to be honest to us, and this is before, as I mentioned, it is even before our MOU. So we can just assure you of our sincerity of working together.
Definitely. Now, coming to the exposure draft at hand, I think you made a very important point, and we fully agree with you that this is quite futuristic. This is taking forward to the next level of enhancing the compliance, or as my sister earlier was saying, governance of Islamic financial institutions. Personally, I feel compliance is more appropriate, because if we talk about governance, it goes much beyond mere compliance, because then we have other issues at hand as well, including fit and proper criteria, qualifications of Sharia scholars, and that's not part of the objective of this standard. However, my comment, more like a discussion with you, Brother Omar, if you allow me, is to understand, is IOP having any plans at all to support the implementation of this standard? Because I understand that this is a principle-based guidance and you expect rating agencies to develop the operational guidelines and parameters. But in our experience, regardless of whoever is the user of the standard, they always require some sort of support or clarity or implementation support. So I understand you have worked with IIRA in developing the standard, but does IOP have any plans to conduct any workshop or any implementation support with the rating agencies which may not have been understanding the background and the objectives of the standard? Thank you.
Brother Faik, thank you very much. And I think this is very important point. In some of the areas, we decided to develop detailed guidelines as well. Like, for example, external Sharia audit, we developed the standard, but we know that in order to develop the industry, you need to provide additional guidance. So shortly, we will be coming up with maybe 300, 350 pages book on the guidance for the external Sharia audit. Similarly, we are planning for the internal Sharia audit. So that is one part that we are trying to do, because we cannot hold workshops for all the Sharia auditors, and we cannot hold it off for all the internal Sharia auditors, but we are open for this. Honestly, a few things are there which we can help on. One of the options is that we can collaborate with IIRA, and yesterday we were having a meeting with IIRA on the instrument part of this standard, and we thought that we can do some of the things together in that. So first thing is that we are open for any support to any rating agency who wants to come for this area, and we will be more than happy and pleased to support by helping in developing the parameters and helping by having workshops and any other guidance as we can have. Another option that now just came to my mind is that if there are more agencies willing to work on this, we can help in actually developing a engine, a rating engine for that. Honestly, it is like it just came to my mind that if we can have multiple agencies interested in that, we can help developing a rating engine, a complete rating engine, computerized complete rating engine that can help. That is just it came to my mind after your point. So we just say that we are open for this, and we might help in developing this thing. But additionally, we are already in talks with IIRA for working together on the market development for this area. So we are open for any other additional suggestion, and any rating agency, I believe one or two are presented here as well. They are more than welcome to approach us and work together. And whatever we can provide as support, we will be willing to do that, including but not limited to at least holding one workshop for the rating agencies. Just one quick comment I would like to mention here, that we are afraid that some of the major rating agencies, although we invited them to be part of our working group, and we invited them in our conference last year, because this is an important topic, so we put it in the conference as well. So we believe that some of them might not be interested because they feel that they don't want to go beyond credit rating. And that is the reason that at times they don't even rate a mutual fund. And even for the sukuk, we had long discussions, not for this standard only, but also for the sukuk governance standard and sukuk accounting and sukuk Sharia standard. We held meetings with the senior guys from the rating agencies, and I can tell you that they are clearly of the view that if the sukuk is a genuine asset-backed sukuk, they don't rate it, because they feel that their expertise and their core focus is credit rating, so they don't want to go beyond the credit worthiness of the originator, which they call obligor, which we believe is a Sharia issue. Calling originator a obligor might be a Sharia issue, but they want to make him obligor, and they assess him as obligor, and they assess only the credit rating of that. So we are afraid, but we feel that as soon as those institutions who are working mainly in Islamic countries, like IRA, like your Malaysian Mark and RAM, I believe they can also come into this, because these markets are bigger for Islamic finance, and they can start with it before the global giants of rating will come into it.
By the way, brother, if you know the audience here, the participants, it would be good information for them. Mark is the shareholder of ERA and also the technical partner, like a Pakistani rating agency, VIS in Pakistan. So there are two technical partners of ERA, Mark and from Pakistan. So I think after this standard, we can have a dialogue with Mark and to look at the Malaysian market, inshallah.
So that is a good idea, that ERA and two of their local partners if they feel interested, we can hold a workshop. That is the starting point. We can invite other rating agencies. Thank you very much, Brother Faiz. It is a good idea. We will take it forward. With IRA, we will take it forward and we will invite their technical partners and all other rating agencies that are working in our jurisdictions and the global giants for sure. We will invite them all. And we will hold a workshop on that to start as a starting point for this thing as soon as the standard is finalized. Thank you very much, brother.
Thank you.
Shall I take it forward now to the standard?
She says it's time for the second standard.
Okay. We will now second standard is not going to take that much time, we believe. So I'll be taking like 15 minutes in skipping.
Sorry, Brother Omar,
Yes.
there's one question here. One comment. Isham?
Yes, please.
This is the last one.
Please.
Isham from my bank Islamic. I just like to reiterate what my sister from INSAF mentioned earlier, because the weightage that you recommended for compliance to Shari'ah principle is the highest one, 30 to 35%. So to quantify as a problem, I hope you bring this forward to your council to discuss, because as we know, every IFI, every countries is a requirement to have a Shari'ah scholar to sit and advise, and to put a rating for a certain decision that have made this is right, this is accurate, this is less right or accurate is not really in line with the قواعد فقهية الاجتهاد لا ينقض بالاجتهاد. So I think I hope you take this seriously to put rating for compliance and to Sharia compliance principle. And that's all. Thank you.
Thank you, brother. Noted. Okay. Now I'll quickly take you through the standard and we'll take comments on the paragraphs. If there is anything important, I will just stop there. Otherwise, so any comments on the objectives or scope? Do we have any comments on the objective or scope? Okay. Then we have the responsibility part. The only thing is that we say that the standard is applicable on the rating agencies conducting Sharia compliance or fiduciary ratings. IFIs are encouraged to have once in 3 years and preferably every year. But this is encouraged only. This is not a mandatory requirement. So even if the regulator adopts our standards, those countries where governance standards are adopted, it's not a mandatory requirement. We have around 15 regulators adopting our governance standards. So even if they adopt, it will not become a mandatory requirement on day one. Any comments on the definitions? Okay, one comment I have, that rating agency, we say that normally the credit rating agencies can do this rating if they additionally enhance their capability with regard to Sharia compliance, or there can be specific Sharia compliance and fiduciary rating agencies which may be licensed by the regulators under this standard. Now these sections are about compliance and eligibility part. Any comments on compliance, eligibility and ethical requirements? Quality control? Okay, let's move forward to the next section. Okay, right now there is one thing, let me quickly touch upon it, that is self-assessment of quality control. The point is that we had long discussions on this issue. Who is going to assure the quality control? Normally, rating agencies right now are not like auditors. Auditors are subject to very strong quality control testing by the oversight bodies and the accounting bodies, but and by the Securities Commission, etc. as well, by times by central bank. In different countries, you have different mechanisms. So it was discussed initially that shall it be open? We thought that if we put the responsibility on the regulator for assessment of quality control, then the regulators might not have any capacity of doing that, and that will result in like a chicken and egg situation, that you don't have the capacity, so you don't license the agencies. So we say that initially the agencies will have a self-assessment mechanism But going forward, maybe after 5 to 10 years, you can bring in the regulator's role in that.
Brother
Then
Umar,
we have the
this is Faik
Yes,
again.
please.
I just wanted to check with you quickly. When you have made references to IOSCO's principles and documents, has the board looked into the content of IOSCO to see if there is any Sharia compliance issue over there, or were they already, in your opinion, Sharia compliant and it's okay to refer to them in this standard?
These principles are related to quality control and etc. So independence in particular. So at the working group level, code of conduct. So at the working group level, we reviewed them and we didn't find any issue related to Sharia on the working group level. But I don't think that I don't remember board discussing this aspect in particular.
Which is a code of conduct for international. For all the rating agencies to follow, by the way.
So apparently there was nothing, because we reviewed it for sure. We reviewed it at the executive team level, and at the working group level, it was like shared with the working group, and there were no comments like that. Just one thing to clarify: all our standards are taken to a committee of the Sharia board, which for the purpose of review from Sharia perspective. And if the committee is okay with it, that they feel that there is no Sharia non-compliance issue, then they approve the standard, like give their consent. Or if there is any issue, then that issue is taken forward to the Sharia board of AAOIFI. So we have our own Sharia compliance review mechanism for all the standards, which are like technical standards other than Sharia standard. Okay, these are the minimum principles for independence and conflict. Then self-assessment of capacity. One important aspect in self-assessment of capacity is that you must have Sharia experts available, which is like both qualitative and quantitative, that not only just appointment, rather they need to be part of the team. So when we say quantitative, it means that the Sharia scholars have to be part of the team and they have to allocate time properly. We have 6 areas, and in all the 6 areas we have defined parameters, as we discussed already, that these parameters are according to AAOIFI's priority, but going forward some of them may be amended according to the jurisdiction specific needs. So but if the rating is jurisdiction specific, then you cannot call it a AAOIFI based rating. You will still say that it is in accordance with this standard, but it is a jurisdiction-specific rating because the criteria applied to assess the parameters has changed. So there are 6 main areas, and let me take you to that table rather than this one, because this is all the explanation of that, but let me take you to the table. This table is important. So weightage, as we said, it is again suggested. The rating agency is at liberty to change it, but it is from to, and we can have more flexibility based on the comments. And the 6 areas, we don't believe there will be a 7th area, but if you want to break 1 or 2 of them, you can break that. So first is compliance with Sharia principles and rules. Second is Sharia governance framework. Third is corporate governance practices related to Sharia governance. Why we distinguished it from the first one is from Sharia governance, because we wanted to clearly identify the responsibilities of the board of directors and those charged with governance and senior management with regard to Sharia compliance. Because it's not sufficient that only you say we have a good Sharia governance framework, but the board and the audit committee and all other risk committee and the senior management are not considering it. So we've broken down the Sharia governance framework in 2 parts. One related to the core Sharia functions, that is Sharia governance framework related to the Sharia board and the Sharia audit, etc. And second part related to the normal management and board requirements with regard to corporate governance, as to whether they are taking care of their responsibility. So we broke it down for purpose. Then there is transparency and disclosure, ethics and values, and fiduciary responsibility and performance. Fiduciary responsibility and performance only has one aspect, which is also quantitative aspect, that is the asset management quality and return on assets, etc. Otherwise, normally, all the others are more qualitative aspects, not the quantitative aspects. Any comment on this one? Because this is like sort of crux of the standard.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I'm Maria from International Islamic University in Malaysia, and I also sit on the Malaysian Accounting Standards Board. Now I reiterate what Brother Zulkarnain said about it being AOP-centric, because I look at the compliance with Sharia principles and rules, and I find that indeed, for Denmark, you say the requirements of the applicable financial accounting standards that are issued by AAOIFI. And you give a mark for A, compliance with Sharia principles and rules, you give a mark of 30% to 35%. So I just want to emphasize the fact that we in Malaysia, we do not follow AOP standards, and MASB is very, very adamant that we follow MFRS or IFRS. So therefore, this is just to emphasize the point by Dr. Zulkarnain, about this compliance with Sharia principles and the fact that this is comprising a high percentage of the rating. Thank you.
Okay, if you allow me here,
can I add up?
if you allow me explanation here,
can I add?
Yeah, please.
In fact, B and C as well, it is very regulated or very controlled in Malaysia because we have Sharia governance framework. Only for functions of, for example, Sharia audit, they can outsource because the governance framework did not stipulate whether you have to have internal Sharia audit or you can outsource it. But the rest, A, B, C, I think it is very standardized, similar from one institution to the other.
Okay. Now, if you allow me, now my explanation is, number one, for example, let's take first the financial accounting part. Okay. Let me go back to the explanation that I have given earlier. First thing is that you may not be following AOP standards, but you may still be following the Sharia related requirements of accounting. Now, what are the Sharia related requirements of accounting? Like, for example, control, what you own and what you don't own according to the risk and reward thing. For example, about the timing of recognition of revenue, when the revenue can be recognized. You can follow some of other requirements which are there in the AOP accounting standards, which are pure Sharia requirements, even without saying that you are following AOP Sharia accounting standards. Same applies to item number A. You might not be claiming to be AOP standards compliant, but you still may be compliant with that. Because the item number B and item number C, the regulations of Bank Negara are and the Sharia standards issued by SSC of Bank Negara are more or less in line with the AOP Sharia standards. Now there can be two institutions in Malaysia. Within Malaysia, there can be two institutions. Like I believe Malaysia has KFH, Kuwait Finance House is there. Now the KFH in Malaysia might be following both the Malaysians and Sharia Advisory Council requirements and AOP standards because their parent is also following the AOP standards. And they still may be compliant with both of that. For example, now let's take another example. Forget Malaysia. Let me give you an example of Pakistan. In Pakistan, they allow salam in currency with some conditions, which is not allowed by AOP Sharia standards. Okay? But now still there are banks in Pakistan who don't go for salam in currency because they believe that it's a controversial product. So while the central bank regulation allows salam in currency, they still are compliant with AOFI because they don't go for it. Please try to understand that this is the whole criteria for parameters to be determined. It's when you say that B is below A, it doesn't necessarily mean that A and B cannot be the same, or A, B, C, D cannot be the same. You can follow IFRS, but still you can be compliant with AOFI financial accounting requirements with regard to the Sharia compliance. But if you are following IFRS and you are following the timing of recognition of revenue, which is non-compliant with the AOFI financial accounting standard, it means that, in my humble view, based on lot of study and lot of details, and I recently wrote a book on this topic as well. In my humble opinion, you are not compliant with Sharia if you are not complying the timing of recognition of revenue as per Sharia. But if you are following the timing of recognition of revenue as per Sharia, even if you prepare your accounts as per IFRS, still it's okay. So following IFRS is not the issue here. We are saying that the requirements of applicable AOFI accounting standard, insofar as they entail Sharia related requirements. So we know that AOFI accounting standards are followed by fully followed by only 19 regulators around the globe. 19 is still not a small number. 19 is a big number, but still, and we have like 7 or 8 who accept it as guideline or secondary reporting. So there are 26 regulators around the globe who are accepting AOFI. Other than that, nobody like maybe 150 plus are not adopting AOFI.
But we are limiting to ourselves with the OIC countries.
Yeah,
56.
yeah, but 56. But we are still no. But it's still you can find in UK and in France there are Islamic banking, in Canada and the institutions are there. So my point is, my humble opinion is what we are saying. We are not saying that following AOFI financial accounting standard is the requirement. No, we are saying that AOFI financial accounting standards have some very specific requirements, which are the Sharia requirements primarily. How to compute profit for investment account holders. What will be eligible for this and what will not be eligible for this. It might be coming from financial accounting standard of AOFI. And you might be following IFRS. Some countries might be like Pakistan has their own accounting standards. They don't follow AOFI, they follow AOFI as guideline, but they have mainly their own accounting standard. Indonesia has their own accounting standards for Islamic finance. So even those countries who have their own accounting standards, or those countries who follow IFRS, we are not saying that you all follow AOFI accounting standards. We are saying you follow the minimum Sharia related requirements of that. But if you say to me, that you are not following those Sharia related requirements. For example, your timing of recognition of revenue on Murabah transactions starts before actual consummation of Murabah transaction, then I would say humbly that it's primarily a Sharia issue. You are not Sharia compliant then. So following IFRS is not the issue. Following the accounting minimum requirements for Sharia is the issue for this purpose. And I cannot compare two institutions who at the same level. If there is an institution who is following those Sharia requirements related to accounting because they are relevant for the Sharia purpose, and the other one is not following those requirements, then I cannot say that both of them have the same Sharia compliance level. But last thing, sorry, it's taking more time, but last thing is still the second option is go for the country specific or jurisdiction specific rating. That option is still there in this standard. But we cannot put like for 50 countries in this standard or this appendix. So we then allow the rating agency to change it and make it jurisdiction specific rating. Any other comment on these criteria part?
Aisha here again. I have a question about the paragraph 18. Just now you already told differences between the paragraph B and C. However, in my opinion, I think B and C overlaps. Like, for example, if you talk about the Sharia governance framework, if you read the Sharia governance framework standards, you will understand that even the corporate governance practices related to Sharia governance would be covered there. In the sense, like for example, how the board should deal with the Sharia committee, their relationship, and everything is covered. So, from a practical perspective, what's the actual difference between B and C? I just want to understand it more. And furthermore, when I thought about these two parts, I understood that, for example, from a practical perspective, the moment you form a financial institution, it would be a separate legal entity, right? So automatically, Companies Act would be applicable. So from the Companies Act, the basic corporate governance framework will be derived. And then when you are a financial institution, again, central bank will ask you to, adhere to certain corporate governance framework as well. But from those framework, if I'm not mistaken, we can't derive anything more than what is already stated in the Sharia governance framework applicable to the respective IFIs. So I just want to know the rationale behind for putting B and C separately.
Very good point, sister. Let me explain it, try to explain it. We discussed it, and initially it was only Sharia governance framework in discussion, but then we broke it down for purpose. Now, one thing, from where we take the parameters might be the same standard. Like for example, for B and C, for both, I need to go for IFSB standard number 10 and standard number 4 and AAOIFI standard number JSFI number 1, 2, 3 till 9. So these things may go together, okay? But what might be like a requirement what was the requirement to break the two was that we have seen in practical. Now this comes from the practical experience of some of our working group members, my own personal experience, and the experience of Iraq. What we felt that some institutions have a very good Sharia board. They have a good mechanism of internal Sharia audit and Sharia compliance function. So for that side, they are very good. But their board even doesn't know anything about Sharia. The board doesn't take any responsibility about Sharia. The audit committee doesn't even review the papers prepared by the Sharia audit, internal Sharia audit department. They just leave it. So we feel that while we believe that both of them go together, it's not very easy to bifurcate the same, and maybe you need to identify the requirements from the same standard. The same set of standard will be identifying the requirements related to Sharia governance and requirements related to corporate governance. But please note it down, it is corporate governance practices related to Sharia governance. So we are not talking about general corporate governance requirements. We are talking about corporate social responsibility. We are talking about the responsibilities of the board of directors and those charged with governance, etc., as to whether they are taking into consideration the Sharia aspects. And they are taking responsibility and ownership of the Sharia compliance part. Because this is the weak part. In a lot of countries where Islamic banking is at a good stage, you will find B to be very good, but C will still be poor in most parts of the world. And we wanted this to enhance, and that's why we segregated it. It was coming from practical experience on the ground.
Brother, but if we look at the jurisdictions who has Sharia governance framework, I mean, already the corporate governance practices related to Sharia governance are covered in the Sharia governance framework, right? So why are we putting it like, for example, why can't we phrase it like Sharia corporate governance framework? So that at least Sharia and the corporate governance and the relationship between the two are covered. So I thought it's kind of redundant, and I was like wondering, why didn't you consider the relationship between the Sharia compliant products to Maqasid Shari'ah as a parameter when you came up with the framework, or was it discussed when it was enacted?
Sister, we will take your point to the board and working group. I just mentioned why it was divided in two. We will take your point again to the board. They will consider whether they want to join it again or not. but or they want to put an explanation why we are keeping it separate. Maybe basis of conclusion we'll have this explanation that why it is kept separate. But as I mentioned that it was initially the same, but later it was segregated for the core reason that normally the C part is very weak, B part in established markets, B part is very good, but C part is very weak. But we can still combine it. I'm not saying that it cannot be combined. I'm just saying that we started with a combined thing, and then the working group and the board discussed and divided into two, because people normally focus on B and don't focus on C, while we want focus on C as well.
And about the
any other comment?
Yes, about the Maqasid al-Sharia point, for example, in paragraph E, ethics and values, or like anywhere else in the parameters, are you considering the relationship between the Islamic financial products offered by IFIs to Maqasid al-Sharia? Are you linking it? Are you like trying to find what is the value-based intermediation, type of perspective?
Actually, Maqasid al-Sharia are not covered in ethics and values. Primarily, Maqasid al-Sharia, we didn't use the word Maqasid al-Sharia because some of the scholars don't buy that. So let me be honest, some of the scholars don't buy that, so we didn't use it. But when we said preferred and less preferred products in the Sharia compliance part, that is part A, we were very clear that preferred is what is as per Maqasid al-Sharia and less preferred is what is not as per Maqasid al-Sharia. We were internally in our thought process very clear, but we avoided using the word because whenever we discuss these things with the scholars, we have long debates with regard to definition of maqasid and how to, and particularly as of now, we don't have any standards available, any clear parameters available for maqasid al-Sharia. But when we mentioned about preferred and less preferred, it was clearly in our mind. I would take your point again to the board and we will see if we want to mention it. But it will not be mentioned in ethics and values. Primarily, it will be mentioned. If we want to mention it, it will be mentioned in item number A.
I think it would be a very good thing if you could refer to the VBI paper issued by BNM and check whether it could be integrated to paragraph E, if possible. I mean, there is a paper development.
Thank you. If you can share the document with us, it will be very good for us. If you can quickly share it with us, we'll surely take it to the board.
Thank you.
Thank you very much. Okay, then coming to the rating scale, I will just give an idea about what it is. It is again very clear suggested scale, and we said that it can be rating or it can be scores. And the rating agency may decide to give one single comprehensive score or may decide to give a score in each of the areas separately. What we are talking about is that this is again suggested rating scale only. You can have any numbers, any alphabets as you like to put. This is just to give an idea and to distinguish what are the important points, like controversial products avoided. As I mentioned, for example, even in Pakistan, there are few banks I know that they don't go for currency in Salamin currency, while it is allowed by the central bank. But they feel that still, since it is not allowed by AAOIFI Sharia standard and it's not allowed by a number of scholars, those banks still don't go for that product. Tawarruk is acceptable as per AAOIFI Sharia standards. Tawarruk is acceptable as per for limited transactions. It is acceptable by Central Bank of Pakistan, but you have to report the Tawarruk transactions to them. But it's still Tawarruk is still not common in Pakistan because of the same reason that people feel that it is, like a lot of scholars feel that it is not there. Jordan, I can tell you there is no Tawarruk. Although AAOIFI Sharia standards are adopted there, and they want to, if they want to do Tawarruk, they can do only interbank and interbank within Islamic. So there is no point in doing that because they all have excess liquidity. So no bank in Jordan is doing Tawarruk. Oman, Central Bank Sharia Board has prohibited Tawarruk. So although AAOIFI standard allows it, but Central Bank has prohibited. So it's not a non-compliance that you don't go for a product which is allowed by AAOIFI. So my point is that still there can be excellent level of compliances by the banks, even if the regulator or even if AAOIFI Sharia standard allows for some products, but they can still pick and choose the best products. So they, in that situation, they can have the best rating on the compliance side, but obviously then there will be the fiduciary and governance requirements. Compliance is only one of the aspects. Sharia compliance is only like maybe a maximum 30% aspect as per 35% aspect as per our suggested scale, but it can be more than that. But the point is that it's only one of the components. So other components still have to be there.
I have a question on that point. I mean, why are we punishing those IFIs who are adopting the controversial products in the opinion of one jurisdiction? Because whether it's controversial or not, the reason why an IFI would adopt or use such products are because either the Sharia, internal Sharia advisory bodies allow it, or either the regulatory authorities in that particular jurisdiction allows it. So, I mean, why do we have to? I mean, Sharia gives that type of flexibility. So why are we just punishing them because they are following a different of Sharia opinion in the market?
Okay, sister, there are two different things. Number one, whether Sharia has the flexibility, or number two, the respective Sharia scholars have the flexibility. Try to understand the difference. There are a few things on which there is no difference in Ummah. Prayers, Saum, Salat, all these things. Ummah is like having same views on some of the aspects. You want the Ummah to divide, or you want the Ummah to have harmony? That is our objective. Sitting as AOIFI, we want to harmonize the things. So we want to bring them all towards the best. So we are not making it a mandatory standard. We are not making like we are allowing the country-specific rating, and we are allowing it all. But the eventual objective is futuristic. We want whole Islamic finance industry around the globe to improve, to come towards the best products. And I can tell you that best products are those which serve Maqasid al-Sharia as well. Tawarruk may not serve Maqasid al-Sharia except for allowing somebody from pure haram to be coming into like an acceptable thing. That's it. But it can never help you in social development goals. It can never help you in economic prosperity for the Ummah. But the genuine products, if you apply the genuine products, they will always bring you to that. Let me give you an example. Around the globe, you will find, according to rough estimate in one of our conferences that was presented by a presenter, around $500 billion of Islamic finance is placed through tawarruk and controversial transactions in European and other markets. Now the question is, if I can divert that $500 billion to those Muslim countries and those Muslim society components that actually need it, can you think of the level of economic development that we can have, the prosperity we can have for the Ummah? Yes, we know that organizations have their commercial aspects, but I don't like if an Islamic financial institution go to public and say we have Islamic financial institution, or we have an Islamic window, place money with us. And then they go to, from the other side, they go to the conventional and place money with tawarruk to them. Is it going to serve the Ummah? Is it going to serve the objective of Islamic finance? So if there is an institution who takes money from common people saying that we are compliant, and they are not doing haram, I'm still agreeing that they are not doing haram, but they are placing 80% of their money in controversial products, and through controversial products, the money is going to conventional institutions. Do you think it's the best thing to do? We are not saying it is haram, but we are not punishing them. Punishing means that, okay, we are not sitting as a regulator saying, oh, you can't do it. No, we are saying you can do it, but the user, the neutral investor, the neutral customer of the Islamic financial institution has the right to know about your comparable state of compliance with the other institutions. Those institutions who are doing the genuine transaction should be given an advantage. It's not about penalizing them. It is about encouraging those who are doing better.
Yes, I understand your point. So in that case, I mean, would it be possible to include at least a definition or how these controversial products would be determined in the guidelines?
We intend to put it in the basis of conclusion. We intend to put it in the basis of conclusion. So I think it was discussed in one public hearing earlier as well. So Sister Zahra, please note it down. We need to write a very clear basis of conclusion on this part that will be needed to explain this thing. But it will not be part of the standard. It will be like appendix to the standard as basis of conclusion, because these points were discussed at the board level. And again, we want Islamic finance to improve. That is the core purpose.
Thank you very much for the clarification.
Brother Omar,
Okay.
sorry to interrupt. Can we go to the second standard now? Because,
Yes. We are done. We are done with the main requirements. If there anybody like just one request, that because some of these standards are very long, and honestly, I so much enjoyed this discussion.
Yeah, really.
Honestly, very useful discussion.
Very educated.
And we are very much thankful to you. So in coming back, just one thing, those of you who have any comments on these parts or any other additional sections, and whose comments we were unable to take, and the sections we were unable to discuss right now, if you have any comments on that, please send your comments at governance@aofi.com. It's a simple address, governance@aofi.com, or you can send directly to me at Umar Ansari at aofi.com. So please, if you can take some time to give your comments. Whatever has been discussed has been noted and recorded, and for sure it will be taken. And honestly, I can say this was one of the best public hearings. This one was the 9th or 10th public hearing on this topic, and I think that this was one of the best. Maybe only in Sudan I think that we had more discussion than this one. Okay, thank you very much. So let's move to the next one. Do we need to take a break before that, or shall we continue?
I will need to leave, sorry, but we know your contact details, Brother Omar. Definitely, we will send you anything. If we have any feedback, we will give you in writing, but please excuse us, we need to leave. Sorry.
Thank you very much, brother. Thank you.
Actually, for the participant here, maybe if you want to take your coffee already served. So we are not going to have any break in between, but you can bring your coffee to the room. All right? Thank you.
Okay then. Okay. So let's continue.
Okay, Brother Omar, we can continue. Brother Omar?
Yes.
Please, yeah.
Yes.
Yeah, can we continue the next standard, please?
Yes, we are continuing.
Okay.
We are continuing to the second standard now. Okay. Thank you everybody for continuing for the second session. This standard is on internal Sharia audit, and it is a revised standard. Means that we earlier had a standard on internal Sharia audit, which was called internal Sharia review earlier, because earlier we have used the terms review and audit interchangeably. But now we believe that audit and we have more clarity on this part, particularly because of the international assurance standard. So now we have decided to call it internal Sharia audit. So the revised standard has the term internal Sharia audit rather than internal Sharia review. Our standard number 3, the existing standard number 3, has the term internal Sharia review, which will be superseded by this standard. Okay, so why we are doing this thing? Let me bring to the main changes by this standard. So you will have an idea why we have brought changes to this one and why we are coming up with a new standard in this one. So what are the main changes from the last standard? Paragraph IN4, if you see, scope and structure of internal Sharia audit are elaborated and the functions of internal Sharia audit are clearly defined. More relevant definitions pertaining to internal Sharia audit are added. Detailed objectives of internal Sharia audit function are stated. The difference between internal Sharia audit and Sharia compliance function is made clear. There are a lot of confusion on this part. So we have clarified it very clearly, what is the Sharia compliance function and what is internal Sharia audit. And you might be aware, some of you might be aware that last year we finalized our Sharia compliance function standard as well. That is standard number 9. We finalized that already. So those clarifications, some of those clarifications are in there, that standard as well. Overall responsibility and key considerations for establishing the internal Sharia audit function are explained. The option of outsourcing the internal Sharia audit function has been specifically allowed in order to cater to the needs of certain IFIs. Organizational reporting line of internal Sharia audit is described in detail. Integration of internal Sharia audit with people, human resources is elaborated. Guidance on use of technology in the internal Sharia audit is included. And principal procedures and process flow of internal Sharia audit are added to the standard for better understanding. Minimum documentation and archiving requirements have been included in line with global best practices. Guidance on the contents of the type of internal Sharia audit report is included. So it is an enhanced standard as compared to significantly enhanced and improved standard as compared to the earlier standard, and we have also referred to the IIA requirements. We have also added requirements with regard to IIA requirements. We have referred to IIA requirements. That is also in addition to this one. Amendment. Okay. Now coming to the.
Brother Omar, I just would like to just ask one question here. I'm Noraini from International Islamic University, Malaysia. Because you mentioned that this internal Sharia audit somehow follow the International Professional Practices Framework (IPPF), which is issued by Institute of Internal Auditors. I'm just wondering whether you have also looked into whether that particular requirement also comply with Shari'ah. Because I think, for example, if I refer to number 44, for example, talking about materiality, because that internal audit framework talking about materiality level, but when it comes to Shari'ah, we are in the opinion that everything is material, so there's no materiality level to be considered. So this is just my concern when I look into the way you take from this IPPS. Thank you.
Okay, sister, thank you very much. Number one, we reviewed the framework and we didn't find anything repugnant to Sharia. That is the first part. If anything is specific, anybody can identify, we will be thankful. Otherwise, we believe that in that framework, there is nothing repugnant to Sharia. Now, what are the specific requirements with regard to Sharia audit, internal Sharia audit? We have tried to put them, like sampling, like materiality, key considerations that we believe are necessary, we have given. The key methodology we have given. But what we wanted was that we have seen the biggest problem in the internal Sharia audit that we have seen historically is that internal Sharia audit is not done in a proper structured manner. The world has changed. Even 20 years back, even internal audit was not that much structured. A lot of institutions were not having internal audit as a post facto thing. A lot of them were doing internal audit as a document verification or payment verification thing. Still, you might find some government organization around the globe that are using internal audit in that manner. Similarly, where we have seen a lot of internal Sharia auditors who are from the Sharia side, and they don't understand the risk-based audit methodology or the structured audit methodology. So at times we have seen them just going to the branch and just asking for some files on random basis and just going through the things without having a very structured approach with regard to the internal Sharia audit to be applied. So what we have done recently is, in this standard, is that we have brought them very close to the international methodology with regard to risk-based audit. This whole standard is on risk-based audit. Even our earlier one was having some aspects of the risk-based audit, but not very clearly defined. Again, one of the aspects is that we don't want to reproduce things from other standards, and we do not want to distinguish from them. If we can live with them, we prefer to live with them. So, and particularly considering another factor that we allow, and a lot of regulators around the globe, we know they allow, including some of the governance frameworks I can mention, like Bahrain allows, Pakistan allows, our earlier standard allowed it, new standard allows it, that internal Sharia audit can be done by the internal audit of the bank. This is because of the cost factor and the management factor. So what is the view of the board and the working group on this is that it would be good if we have uniform methodology for internal audit and internal Sharia audit, and then very specific aspects which are related to the Sharia audit should be here. And whole world has moved towards this risk-based and structured audit approaches. So it would not be good if we do not bring our internal Sharia auditors to that line. A lot of institutions around the globe have internal Sharia audit, but the efficacy and efficiency of that function is not very much, not very good as of the moment. So we are trying to bring it close to that. The project includes that we will be developing detailed guidelines on that as well. So once we finalize the standard, we will be working on the detailed guidelines, as I mentioned in case of external Sharia audit. So external Sharia audit guidelines, we are towards finalization. But once we finalize this one, we will start working on the internal Sharia audit detailed guidelines as well. So putting it like as a summary, we believe that internal Sharia audit principally can follow the methodology approach of the risk-based audit methodology and approach, which is generally used by IIA. Now, there is one difference. Our external Sharia audit standard also follows International Standard on Assurance Engagement 3000, ISAE 3000. But in our case of external Sharia audit, we decided that our standard will be only supplementary to ISAE 3000. So actually, if you read our external Sharia audit standard, we believe that that is only like additional standard or supplemental standard to ISAE 3000. Even IAASB has issued certain other supplemental standards to ISAE 3000, which are related to different type of assurance services. So we issued only external Sharia audit engagement as a different type of assurance service. But in this one, we considered and we decided that we don't want to make it a supplemental standard. Rather, we just want to refer to IIA framework with regard to the areas that we haven't touched upon. So in this case of this standard is primary and IIA framework is secondary. While in case of external Sharia audit standard, the ISAE 3000 is primary and our standard is secondary. So there is this has been the approach of the board till now. Shall I move forward or any other comment?
Brother Omar, can I state
Yes.
My observation straight away, because I'm a teacher. I got students waiting for me afterwards, so I need to go. So I have to read out whatever I observe from the standard. I already read line by lines of the standard. Okay.
Thank you very much.
My first issue, number one, this proposed or exposure draft did not clearly outline the Sharia governance mechanism or players and functions where internal Sharia audit exists. A clear understanding on the line of defense performed by Sharia governance mechanism or players should be established. From here,
If you allow me answers one by one to your questions.
Let me read this one first. And then maybe we can do the feedback. So what I observed from the standard, Sharia audit should report to audit committee, but there are also paragraph referring to supervisory SSB, Sharia Supervisory Board, which is second line of defense. I believe a clear line of reporting where it should report to audit committee, which is you already have in your standard, and Sharia committee should be only dotted line or outside of this line of reporting, because the third line of defense should not overlap with second line of defense. That is my view. You can later discuss on that. Can I go on the 6th and then we discuss?
If you allow me answering one by one, because at times the person forget the points. So first thing is on the complete framework, AAOIFI did not have single standard on the framework. Rather, they started developing the standards step by step on different areas of the Sharia governance framework. So we don't have one single standard on the framework identifying all the things that go in place. It was part of our long-term plan But more recently, we have already started a joint project with IFSB, and we hope the outcome of that standard will be bringing the updated version of IFSB standard number 10 and some of our standards. So inshallah, as soon as we complete that project, those lines will be very clear and more clear. So we might still continue with our individual standards with regard to detailed guidelines, etc. But the overall framework will be, inshallah, in one single standard. That is a project that is already started, alhamdulillah. So that is one. Secondly, on the reporting line, we have got both sides' views. Some people believe that it should be reporting to Sharia board. Some people believe that it should be reporting to the audit committee. Some people believe that reporting to audit committee should be there and dotted line to the Sharia board. And some people consider vice versa. We are taking all your comments and we'll take them to the working group and the board. And then they will, after considering all those comments, they will decide what should be the best approach for that. You can now please next comment, because I just didn't want to forget your points. Please go ahead.
The structure of internal Sharia audit in Islamic financial institution, especially in our jurisdiction, we have leverage model, we have independent model, where the Sharia specialized staff will exist in internal audit department, but for foreign bank, which is two of them from GCC countries, they implement the whole department, internal audit department, as Sharia audit department. So my point here is the standard did not comprehensively spell out how the Sharia audit being structured in institution. So perhaps the standard should further elaborate on that. Second, my research and observation find out that if they use leverage model, they have not enough resources. That is my personal observation. Where when it comes to branch audit, normally the Sharia people will not go to the branch. Their internal audit team will bring the audit program to the branch. So maybe you can, the standard can spell out further on various situations.
Okay. If you see paragraph 19, we allow all the three options, and AAOIFI shall establish an internal Sharia audit function with suitable resources. So the first thing is suitable resources. And we have put the responsibility of the audit committee to ensure having suitable resources. Sharia board normally is not in a position to ask for suitable resources, but audit committee is in a much stronger position to ask for suitable resources. So we are requiring the suitable resources, but we are allowing all the three options. We are allowing a separate department, a unit of internal audit function, or outsourcing of the function. So we are allowing all the three, and then there is some explanation on that in the next paragraphs as well. But if you want us to have additional explanation, we can do it, because we are saying that internal audit can be done as a unit, but these three requirements are there. So if you can fulfill these three requirements, then the internal audit department can also have the function. Then otherwise, the second option is that it can be outsourced to a professional firm in case of this and this requirement to be fulfilled. But normally we say that if you look at this paragraph 20, it is recommended that a separate independent department should be there. So if we say that generally a separate department has to be there, it means that normally we recommend this one. We are saying this, but we are allowing item B or C subject to the conditions provided. But any other explanation that you want to suggest, we will appreciate if you can give it in writing. If you want to put any additional explanation, if you send us in writing, we will be taking it to the working group to make more clarity into this part. And maybe we need to put some basis of conclusion on this one to allow some more guidance on this.
Number 3 on the scope and objective. The standard have scope, but I believe that the scope not really focus on the area. You did mention on that, but maybe not complete. And the same goes to objective. For example, in external audit, we have completeness. We have the objective of accuracy. So what is the objective of Sharia audit? So that should be spelled out in the standard.
If you see, these paragraphs are trying to do it. If you let me take you to these paragraphs, they are trying to do this thing. Okay, if you see these paragraphs, paragraph 16 and 17. 16 is the primary objective, that it is to provide assurance in form of independent opinion to those charged with governance and SSB in respect of adherence of the AAOIFI with Sharia principles and rules. And 17 includes the secondary reporting, that is about the governance structure, the internal controls, and the risk assessment mechanism. So this is we tried to put this one like as you want, but maybe still we are like short of something. So we will again appreciate if we can have more like guidance from you, if you can provide in writing like what would be added here, what needs to be added in paragraph 16 and 17 to make clear what you want.
Yeah, thank you. Because if you have a very clear objective, then the audit strategy, the evidence that you're going to collect is very clear. For example, if completeness, then you will go on the respective documents. Okay, never mind. We stop there. Number 4 on independence. I think, I don't know whether your boards will consider this. The situation where independence may be threatened and how it may be the safeguard measures for independence should be in the standard as well.
Okay, we will try to do that. We are taking your comment. We actually honestly we made the reporting line to the audit committee and kept it like internal audit to be independent, but we can add a few more things on that for sure. We take your point.
Okay, my last comment on this, the nature of internal Sharia audit function. I would say majority of the work is on Sharia, but accounting part will be there and operation as well. So how the materiality on qualitative issues be measured as pointed out by Dr. Noraini just now. Naima, you already answered, but I just highlight this for your board to consider. So for example, riba, gharar, I myself a chief auditor of Israq Consultancy. You mentioned my leaders just now, like Prof. Akram. We did Sharia audit on few IFIs. For example, if we find Fuduli situation where asset is not there, so that for sure very material situation. So I agree to Dr. Raini that materiality in this situation a bit difficult to assess unless you go on transaction by transaction at operation level. So I think yeah, maybe you can accept, or maybe you have your own reason for that. I fully respect. Thank you very much.
Okay, on paragraph 44, we have provided some basic guidance. We can expand to that. We can expand some situations to that, or maybe we can provide again some guidance on that. So we will be like, we'll just take your point to the board, and we'll see how much it can be added here.
Yeah, for example, I just give you an example. Recently, we did an audit where the CPO, the asset is in Papua New Guinea. So we question is whether if the customer want the CPO, can they deliver to Kuala Lumpur from Papua New Guinea? So that kind of issue will raise gharar issue. How material is that? So I'm a bit confused if you put materiality to be measured in Sharia audit.
Okay, one thing I can assure you that we are working on detailed guidelines as well. So maybe some of your points might not be addressed in this standard, because the standard obviously has limits. Like you know, the standard size, if it becomes much like bulky, then it is difficult to like get people convinced, and there are a lot of issues. But and as per AAOIFI policy, always standards are principle-based guidance. They are not detailed rules. But with regard to details on the materiality part, I can assure you that if we can't add anything here, then we will still be adding significant guidance on the guidelines. So brother saying if you can note it down that we'll try to put additional guidance on materiality here, but if the board doesn't agree, then we will make sure that we add that additional guidance in the detailed guidelines. Okay. Thank you very much, sir, for your very valid comments.
Brother Umar, I have a question
Yes.
to ask. I've always understood materiality from the Sharia perspective takes into account the qualitative aspect, not the quantitative. Because if it's haram, whether it's $1 or 1 cent. So therefore, I have this concern about matter. The same paragraph. It says the matter either quantitatively or qualitatively. So if I have misunderstood it, I would like a clarification. Thank you.
Okay. If you allow me, I can just give you one explanation here. For example, like materiality consideration. For example, like I can give you an example that, like for example, if the bank is doing routine murabaha transactions, that is okay. You know that they are doing routine murabaha transactions. But if they are doing routine murabaha transactions in a type of industry where the process of purchasing and consumption is very fast, like in sugar industry, across the globe, you will see that sugar mills just purchase the sugar cane and put it in the process directly. This is one example. Similarly, if they are trying to do it on gas supply, because gas supply is very fast at the pipeline, so are they really taking the risk or reward? So some of these aspects will be considered with regard to the qualitative materiality, and those will be taken care of. Only question is to what we would like to take all these examples and all these things, but maybe the standard might not be like the good place to put them in. Maybe we need to provide all these sort of additional guidance and examples, etc., in the guidance, in the guidelines, detailed guidelines. Inshallah, we'll try to do that. Particularly with regard to materiality, what are the aspects which are the qualitative aspect? And when we mention about qualitative aspect, we are saying very clear, which is beyond the risk appetite and tolerable limit. Means that generally you go quantitatively. You see the tolerable limit and you see the risk appetite. But for the purpose of halal and haram and for the purpose of Sharia non-compliance risk, you might still need to go to a much smaller level, considering if that thing is risky. Okay, so let me take you back to the beginning, and let's quickly go through paragraph by paragraph if there are comments, taking comments paragraph by paragraph. Okay, so objective is there, relationship with other professional standards. We discussed that it is with the International Professional Practice Framework by IIA. Scope, anybody have a comment on scope? Okay, on the definitions, mostly, is there any comment on the definitions?
Brother Omar, I think I just would like to ask with regard to your definition of external Shari'ah audit, because you have okay, 4A, yes. For example, there you define external Shari'ah audit as independent assurance engagement, and what I can also understand that internal Shari'ah audit also talk about independent assurance. So how can you differentiate between external Shari'ah audit and internal Shari'ah audit based on your definition in the draft?
Okay, if you see the external Sharia audit is okay. Let's distinguish step by step, because some of the things are explained and some of the things will be explained in base of conclusion. Number one, external Sharia audit is independent of entity, while internal Sharia audit is an independent of management, but not necessarily independent of entity. Am I clear? External Sharia auditor has to be independent of the entity, that is the Islamic financial institution. So he has no direct link with the institution except being its auditor. But internal Sharia audit is a part of entity. Normally, it may be outsourced, but it is normally a part of entity. But it is different in that aspect that it is independent from the management and reporting to the audit committee. That is part one. Part two is the objectives. When you go for the objectives, in the external Sharia audit has only one opinion, and that opinion is on the compliance. Internal Sharia audit has objectives, which first is compliance or adherence to Sharia principles, but secondary, they have governance, they have controls, and they have risk in their objective. So the objective of internal Sharia audit are different. But considering your comment, maybe we might need to improve the definition. The definition is a function as a part of the governance organs of an IFI, being independent of management, with the primary objective to provide assurance to those charged with governance and the SSB in relation to IFI's adherence to the Sharia principles and rules. So we may consider improvement of this definition to distinguish it more from the external Sharia audit. We will take your point.
This standard, this draft actually for internal Sharia audit. I mean, this actually referring to international audit. But the first definition should be relevant to internal Sharia audit, not external Sharia audit. Then maybe you can define external Sharia audit as the outside entity or outside party that maybe the institution may want to outsource. I don't know. I mean, I'm thinking from that perspective whether that can be done. Because, for example, the institution may want to engage external party to do Sharia audit. So this is what I understand when you talk about external Sharia audit. But I think this draft actually focusing on internal Sharia audit, then perhaps you need to really define in detail what actually how you should define this internal Sharia audit. Thank you.
Okay. We take your point and we'll see how much is needed to improve here. We will surely reconsider the definition.
Brother, I have a question regarding the definitions. For the internal auditors, yes. It could be an individual or a firm, right? A firm can be appointed, isn't it? So if you see that draft D there, the definition of internal Sharia auditors, it says, are those individuals who perform the activities of the internal Sharia audit function. But then shouldn't we put slash like individual/firms, right? To reflect that. Did you get it?
No, I completely got your point. We just need to see, because even in case of firm, we required individuals to be clearly identified, like head of Sharia audit and the team and everything. So, but for sure, we got your point. We might need improvement here. We fully agree.
From a legal perspective, if you're outsourcing it, the firm will do it, right? For example, let's say in the appendixes, you provided the requirements, the qualification of Sharia, the head of internal Sharia auditors, right? So my question is like, aren't we supposed to integrate knowledge? Because when we talk about Sharia audit, it's not only Sharia knowledge which is required, because there's qualitative and quantitative part, and even a Sharia scholar or a qualified Sharia person might not be able to detect the problems unless they have some sort of a legal knowledge. So I thought, why can't we just integrate all those knowledge required in the function itself rather than focusing on individuals or firms? I mean, can't we take a perspective whereby we clearly defines the type of knowledge required by the personnel who are going to do the audit? Because right now, practically from my experience, I find that one person doesn't have the knowledge required to do Sharia audit. Either they have the prudential audit knowledge or Sharia audit. And when it comes to IT, it's much more complex. Because, I mean, how would a single person have all these types of knowledge to find? We are trying to find faults, right? So I don't think it's easy to do that by a single person, and we should take an integration of knowledge approach rather than saying, okay, this person should have either this or that or that. We can't, I mean, the reality is right now what we are facing in the industry is we can't rely on one person's knowledge to do this properly. And another concern is there are some international firms who say that they can conduct Sharia, internal Sharia audits. But at the end of the day, they send just one person, and The report is so brief that we don't even know what they look, what they check, and at the end of the day, they give a certificate saying that this company is Sharia compliant. That's it. There is no date or nothing. So what I'm trying to say here is that there's misconception among the industry. When we say Sharia audit, they think like it's a certificate, it's like halal certification. But no, it's not halal certification, it's a continuous process. So I just want, this to be reflected in the exposure draft somehow so that, these types of practices will be eliminated in the industry, because at the end of the day, we're talking about the reputation of our industry, and if we want to have a sustainable Islamic finance industry, we need to align our practices to something called international best practice, which you are formulating right now. Thank you.
Sister, very important points, but if you allow me, I'll take you to paragraph 7 and 8. If you see, the internal Sharia auditor shall fulfill the requirements of the Internal Audits Quality Assurance and Improvement Program published by IIA in addition to any other professional and regulatory requirements in this insofar as such requirements relate to internal Sharia audit. The head of internal Sharia audit at all times shall ensure that the internal Sharia audit function has adequate capability in terms of resources and knowledge to fulfill its responsibility in a professional manner. This shall entail active involvement of Sharia experts throughout the process. So we are clearly saying that audit and experts have to be there. Then we clearly say there should be independent and peer review requirements. Then we are putting all this.
But how do we know whether they are independent or not? I mean, what is the yardstick to say whether they are independent? Or, for example, I say sometimes in the organization they share staffs, right? So one staff could be in the audit and the other staff could be in another department. So in that case, does it mean that we are compromising the independence of that particular auditor? Or like, what is the yardstick to measure that?
Okay, let me take you through step by step. Okay, first was this, then we have independent and peer review requirement, then we have due professional care. Internal Sharia auditors shall exercise due professional care in performing internal Sharia audit. Professional care shall be appropriate to the complexities of internal Sharia audit being performed. In exercising due professional care, internal Sharia audit shall be alert to possibility of both intentional wrongdoings and unintentional errors. Then going to independence or objectivity. The organizational status of the internal Sharia audit function shall be appropriate to accomplish its responsibilities with independence and objectivity. The internal Sharia audit function shall be independent of the management but may not necessarily be independent of the entity. The management shall ensure that internal Sharia audit function has unrestricted access to all documents, reports, systems. The management, the audit committee and SSB shall provide full and continuous support to the internal Sharia audit function. The internal Sharia audit function shall have direct and regular communication with all levels of management, the SSB and external Sharia auditors. The internal Sharia auditor shall be objective in performing the professional responsibilities. Objectivity includes independent attitude, while the internal Sharia auditor shall maintain in performing internal Sharia audits. They shall reach objective conclusions based on the work performed and the results thereof. Internal Sharia auditors shall not undertake any operational activities of the IFI or perform any management function, including product development and Sharia compliance functions. So if you see, we have tried to be very clear on these all parts. Some of the specific situations may be taken to the guidelines, may not be necessary in here. But I think that most of the things that you mentioned, we have tried to cover them all in these paragraphs. And for sure, nothing is perfect, and that is the purpose of having this access to you guys and getting your very valuable comments. And we are very much thankful to it. So maybe some of your comments still will add value to this standard as well as to the guidelines. But we try to cover the aspects that you are generally talking about. Okay, then we have the objective and the organizational structure. Objective, yeah, please.
Can I add something? I mean,
Sure.
I'm thinking, would it be possible to detail those further, maybe as a footnote or maybe with some illustrations or things like that, so that at least the financial institutions who are adopting this would be clear about the situations? Just an idea.
For sure, sister, if we were not planning to have detailed guidelines, we might have added some of the important aspects here. But the board decided, I remember this thing, because not only in one area, there were multiple areas where there were situations to be added. And the board decided that if we are going to publish detailed guidelines, then it is better to keep the standard only principle based and provide illustrations and examples in the guidelines. So inshallah, guidelines will be coming as soon as we complete this one. We will start completing the guidelines part, inshallah. But for sure, we will not be missing your points. For sure, they are taken.
Thank you.
Okay. Now coming to objectives, we discussed objectives earlier. That main objective is Sharia compliance, but secondary objectives are governance, internal control, and the risk assessment, risk management part. So internal Sharia audit has to take care of all these things in addition. Now this is very important with regard to resources. We had earlier comment, the audit committee of the AAOIFI shall ensure that a robust and effective internal Sharia audit function exists in the AAOIFI and remains in operation. The audit committee shall keep oversight of the overall internal Sharia audit function and shall provide its input in this regard. SSB, on the other hand, shall provide necessary input to the internal Sharia audit function on a need basis.
Assalamualaikum. I have a question, brother.
Yes, please.
Yeah, my question is, when it comes to the Shari'ah audit committee, you mentioned that it is a subset of the internal audit function. Is there any, and you correlate that to an internal audit skill set? Whereas there's also the other aspect, which is actually the Shari'ah skill set. So I'm not sure, you know, in your quality control, the paragraph 7, it doesn't seem to have specific mention in terms of what are the qualitative criteria that an internal Shari'ah auditor should have in terms of Shari'ah skill set.
If you see paragraph number 8 is there, then we go to the appendix. If you allow me to take you to the appendix. Appendix is on the fit and proper test for the head of Sharia audit. If you see this appendix, head of internal Sharia audit, the person appointed as head of internal Sharia audit on a full-time basis, or being a person assigned by a professional Sharia audit firm on outsourcing basis, or being the head of internal audit also being entrusted with the responsibility of the head of Sharia audit. So it applies in all the situations. If he is head of internal audit also looking after Sharia audit, if it is full-time head of Sharia audit, or if he is outsourced head of Sharia audit, then he shall have a university degree or professional qualification, preferably in accountancy, audit, internal audit or Sharia audit, suitable for position, well versed in the operations and functions of the Islamic banking and finance and relevant Sharia principles and rules, including in particular those contained in the hierarchy in line with paragraph 4K of this standard, as well as having understanding of fiqh al-mamlat. Preferably having 5 years, but in no case less than 3 year work experience in the areas of Sharia compliance, Sharia advisory, internal, external Sharia audit, internal audit, external audit, and assurance of other relevant areas. And having been approved by SSB, the SSB has the power to review the person with regard to the necessary knowledge and skills in Sharia principles and rules applicable to the AAOIFI and fiqh al-mamlat. Sister, we cannot provide this requirement on all the members of the team, but we provide this requirement on the overall head of Sharia audit. And then remaining team members may be coming from both sides, Sharia side and the accounting audit side.
So is it mentioned anywhere that any one of the members must be a Sharia qualified person?
Yes, paragraph 7 says that including the involvement, paragraph 8 says that including the involvement of the Sharia board, Sharia expert.
But that Sharia expert is external, so it presupposes that...
No, it's part of the team. He's part of the team. It's not expert, it's part of the team. The head of internal Sharia audit at all times ensures that the internal Sharia audit function has adequate capability of resources and knowledge to fulfill its responsibilities in a professional manner. This shall include active involvement of Sharia experts. They are not external. They are the Sharia team member. Let's put an explanation to that part. Brother Sayyid, please note.
Yeah, I think it should be clear in that you know.
Yeah. No, yes. No. Because some members may be coming from the audit side or accounting side, but others will be coming from Sharia side. So we are talking about Sharia side. So including involvement of Sharia expert team members, Sharia expert team members. We need to add Sharia expert team members. So they are not outsiders. They are Sharia expert team members. Okay. Okay, so now let's move forward. So then we have the objective section and establishment of the department, and we already discussed these sections already. And reporting line, we discussed that primary reporting is those types of documents, that is audit committee, and dotted line reporting to SSB. SSB has one additional power, as we mentioned in the specimen fit and proper criteria. SSB will have to approve the person that if the person has enough knowledge of Sharia so that he is able to he or she is able to actually take care of the work. Normally what will happen that the team will work, head of internal Sharia audit will review the work and send the draft report to Sharia Supervisory Board. Sharia Supervisory Board will review and provide comments. This is important because if there is a Sharia issue, whether the transaction needs to be reversed or the income to be paid in charity, or if there is an option to correct the transaction post facto, or if there is an option to or if there is another view on Sharia in which this may be allowed. So in these situations, normally internal Sharia auditor, the auditor doesn't have any authority of its own. So the Sharia board has the authority to make decision in these respects. So Sharia board will review the report and provide comments. And after that, the final report will be submitted to the Sharia board and audit committee. One more thing is important here. It's not written in the standard in that manner, but that is very important discussion point, that actually the Sharia compliance has two main aspects. First aspect is the design part, whether the products are compliant, whether the processes are compliant, whether the whole documentation is compliant. That is primarily the responsibility of the Sharia board. That is the design part of the transactions. Then there is execution part of the transaction. So Sharia compliance for execution part is primarily the responsibility of external Sharia audit and internal Sharia audit. So normally this is the only question is, are there any areas where the internal Sharia audit or the external Sharia audit may have a view on the design part? This is a very crucial question. And we believe that with respect to the hierarchy of Sharia compliance that we discussed, the same hierarchy that we discussed in the rating standard, this is important, because what we believe that when the internal auditor reviews the things, then they have to see item number K, I think, yes. So they have to see the compliance level according to standards and regulations. Again, in jurisdictions like Malaysia, item number A will be item number 1 will not be relevant. That is a Sharia standard issued by AAOIFI, but 2, 3 others will be applicable. So what the person has to do, the issue is if the Sharia board has approved a product, and that product is not in line with the product approved by Malaysia Bank Negara SSE, then what is the responsibility of the internal auditor? Considering these Sharia principles and rule hierarchy, he is going to challenge the Sharia board. Earlier, this was not there. In our earlier standard, the main responsibility of design part was with the Sharia board, and the internal auditor or internal Sharia reviewer was not going to challenge that. Because the scope was Sharia principles and rules as determined by the Sharia Supervisory Board of the institution. This was in all our earlier standards. But in the new standards, we have put in this hierarchy in all the new standards: external Sharia audit, internal Sharia audit, Sharia compliance function, and Sharia rating. In all the standards, we have put this hierarchy, which means that if there is an institution where the Sharia board has overlooked, or maybe Sharia board approved a product several years back, and now Sharia Advisory Council of Bank Negara or AAOIFI Sharia standard come up with a new standard or a new requirement which does not allow that product, or which requires some major changes to be brought into that product. In those situations, internal Sharia audit, considering this hierarchy, is now responsible. They will have to identify those issues. In the earlier standard, it was not the requirement. I believe this is a major change, because although design part is still with the Sharia board, but still the internal Sharia auditors have the right of questioning if they feel that the product approved or the processes or ruling of Sharia boards of the respective institution is not in line with the hierarchy. So this is an additional part which we have now. Then we have the establishment of the function and all that. We quickly had a view on this one. Let's go to the next part. What we are saying in the standard.
Brother Omar?
Yes, please.
I
yes,
just
please.
like, to ask you with regard to the structure of this paper, because I think I'm interested also to see the Shari'ah audit process also be explained very clearly. Because I think there is in the papers, in the draft, talking about planning, talking about execution, talking about reporting, and also talking about follow-up. But perhaps maybe they also need to have one section explain how the international audit to be done. Mean that the process should start with the planning and the execution and then the reporting and final the follow-up. But that one is here, but somehow it's not in the in the right place. So it's everywhere in this paper talking about that process. So that's just my comment. Thank you.
Okay. Okay. Let me recap from like initially. Let me summarize the going forward what we are talking about in this standard. The overall thing, objective, and these things we have discussed. Additional requirements are there related to human resources and use of technology, etc. Those requirements are there. And this is, as I mentioned earlier, that responsibility for having adequate resources is with the audit committee. And since audit committee is the board committee, so they have the power to request the management to actually have the enough team. Now, coming to the main part of the standard, let me come here and then first summarize it for you. Now, the principal procedures, what we are saying that internal Sharia audit shall be performed in two different stages. Stage 1 is the annual and periodic part, and stage 2 is the engagement part. In stage 1, that is the annual or periodic part. In this part, at least once in the year, you go and review the overall governance structure, overall risk assessment, overall internal controls, and based on that assessment, you also identify what are the weak areas, what are the branches, areas, regions, departments, functions, products that are to be covered during the whole period. This process will primarily be handling the governance part and the risk part and the control part. And based on that, there will be a plan to be submitted, and then on completion of that plan, there are reports to be submitted. The report may include the main points coming from the individual engagements, or the individual engagements may be provided to the reviewers, the audit committee and the Sharia board, if they want to review all the individual engagements. But normally we believe they will not be requesting all the individual engagements. So the periodic report will be taking care of the most of the points of the individual engagements. Once you identify, during the main plan, once you identify the important regions, branches, departments, products, functions, whatever you need to cover, you call it engagement. So you identify the engagements and you identify the scope for those engagements, and based on that you need to perform the engagement function. And in the engagement function, again, there will be the planning and risk assessment related to that, and the assessment of controls within that engagement, and then there will be a reporting part. So this remaining section of the standard is structured in this manner, that what are the initial documentation requirements and periodic updates, and then there should be a charter, there should be periodic plans, there should be a manual. This is a requirement that there should be internal Sharia audit manual or SOPs, and then the scope should be defined. Scope is defined here with regard to the annual part or periodic part versus the individual engagement part. So this is the summary. This section provides summary on the annual and periodic part. Any comments on this annual and periodic part? Okay. So next section is about the about the engagement part. So on the engagement part, we have this process flow. Maybe on the screen it's not very clear, but I believe you have the standard on which you can read it. So these are the step-by-step processes that you need to follow for performing the engagement audits, and limited guidance to that. Then we have added some key considerations for that, like materiality considerations, sampling considerations, and then we have provided IT auditing techniques in addition to that, and performance of detailed procedures in the areas where you still have a medium to high risk. Then we have put in the next section, we have put the documentation and tools requirement, that what should be the minimum documentation requirement. This is again one of the weak areas. We have seen internal Shari'ah audits to have very weak documentation and archiving requirements. So we have put very strong documentation and archiving requirements, and we have recommended that internal Shari'ah audit software should be used to improve the process. Then we have the reporting part, the periodic reports part, and the engagement report part, and what should be contents of those reports. So these are the guidelines, the principal guidance with regard to the contents of the report. Again, every institution has their own mechanism and own system of reporting. So we have not gone into details for that. We have just identified the key contents on that. So this is like first was the periodic report, and then the engagement report. What are the contents of the engagement report? And then you can have a rating mechanism, like a lot of institutions have an internal audit rating mechanism. So you can have a Shari'ah audit rating mechanism as well. And then follow-up and follow-up reporting is a requirement, that you must have a continuous process of follow-up and follow-up reporting that is there. So this is the summary of the standard. Any comments on the remaining sections that we haven't discussed in detail, please feel free to share. If no comments, then I think we are done, because the specimen the effective date that we are recommending is 1 January 2020, and it will be superseding our earlier standard. And some of the new appointments we allowed as a transitional provision, that if you already have a head of internal Shari'ah audit who is appointed before having this standard, you don't need to fire him if he doesn't meet the criteria. You don't need to fire him, because it will be applicable on the new appointments, because otherwise it can create a chaos situation. So we hope that existing ones, because obviously all the good standards have some flexibility for the existing situations, and this will supersede our earlier standard number 3. And this is specimen fit and proper criteria we have already discussed. So this is the summary of the standard, and I believe even in this standard we have got some very good points. So any missing points, any other points that you would like to add?
Yeah, Brother Omar, I think there's no more comments from us.
Okay, so thank you very much again. I would like to thank you all for being here, and thank you the management of AAOIFI, because it is honestly a great pleasure to be in contact with you guys. And again, as I said, inshallah, next time we will try to be there physically, so that we can have more like an interactive session, better interactive session. But I can tell you for sure that we conducted multiple public hearings in recent past, and it was, in terms of the input and the comments that we received, probably I would like to appreciate all of you guys that it was one of the best amongst last few public hearings. So thank you very much again for this, and inshallah we hope to have your written comments on this standard and other standards as well where needed. And particularly on the Sukuk governance standard, it will be good if you guys can share your comments, so it will be great. Thank you very much from our side and from the management of AAOIFI. Thank you very much.
Thank you very much, Brother Omar, from your side. Okay, so all the participants also, I would like to thank you for all your comments. So hopefully this comment will be taken into consideration by AAOIFI later to improve their standards. And we make dua that your standard will be also ready for implementation soon. So thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.